Good morning, everybody. Welcome back to another episode of the Market Open. We are back in the studio. It has been so long since we were here and back to normal, but we're back and we're good for like another really 2 weeks in the studio. I mean, there's going to be a slight little delay during the Robinhood event, but then after that, there's pretty much no traveling, presumably for the next month. So we are going to be in the studio like normal and able to do the show on time every day, 2 times a day. I was late today because the camera was being kind of stupid because I hadn't set it up for like 3 days. But outside of that, we're here. And I am very, very excited. In the pre-markets, we have a pretty green pre-market. And it's one of those pre-markets that gives you a lot of hope, gives you a lot of optimism. Robinhood's damn near reaching $40 in the pre-markets right now. Palantir's up 3%. Nvidia's doing a round trip back to 125. Tesla's the only one that's actually down in the pre-markets. Everything else is kind of green. And we're going to talk about the retail sales data we got this morning that gives a little bit of hope for why we may continue to go green. But we're green. Friday, we had a bounce. And the question on Friday was, would that bounce be able to sustain itself? And it did. Friday was actually the best day of 2025 in the stock market, believe it or not, across the S&P, the NASDAQ, the Dow Jones, small caps, everything. And so individual stocks ended up going up around 7 to 10% because the indices were up about 2 to 3%. But it was a good day. And I think today the number one question is going to be in the next 40 minutes, can this bounce sustain itself, or does this bounce have the inability to actually build momentum? I am 50-50 split on it. I really don't know. There's a lot of data that I have pulled up here that I want to go through that gives us some type of historical correlation for why we did find a bottom in the past week. But then again, you never know based on the different types of volatility we have. Obviously, the tariff volatility being the biggest one and a variety of other headlines that can happen. This week on Wednesday, in about 2 days, we also have JPOW with the FOMC press conference. So that's going to be important. Most likely, we are not getting a cut. Fed futures probabilities right now have a cut priced at 1%. More likely it's at 0%. I mean, we're not going to get a cut in March, but based on the data we got this morning, maybe there's a better chance to get a cut in May. And we'll get a feel for what Jay Powell thinks about the labor market when he talks on Wednesday and get an understanding of how he's conceptualizing it. On top of that, we have Nvidia GTC that's starting today. I'll be streaming Jensen's keynote tomorrow at about 12:30 p.m. Eastern. So tomorrow will be an extended market open to cover that keynote. But we will have Jensen speak today. We'll have a bunch of the quantum people be speaking at GTC. A ton of different updates, hopefully, we get in terms of Blackwell, Rubin, next generation chips. And so we'll see if any of that creates a catalyst for NVIDIA in general. All right, cool. Thank you, everybody, for being here. I am happy to be back. It has been so much traveling this year. And it's not stopping in the next couple of weeks when we do the Robinhood event, but it is just it has been a lot of back and forth traveling. I'm happy to just be home. What did I do on Saturday? I slept. No surprise. Let me know what you guys did over the weekend. But on Saturday, I slept, and yeah, I just got some sleep. I couldn't do the future show last night because we had family come over from Texas that I didn't even know was coming over. Like, that's how out of the loop I've been in like personal life. That there's like Texas family. I was like, what? Why? We have family from Texas? So I couldn't do the future show last night. But thankfully I got some rest over the weekend, and now we're back to hopefully being on our regular schedule and doing what we got to do. So there we go. All right. Thank you, everybody, for being here today. Let's get started. We've got a ton of interviews coming out from AIPCon as well. Those will be out probably in the next 2 days. I was editing a little bit of it last night. So Archer, Wendy's. By the way, the Wendy's interview was great because I told the Wendy's dude to like ban mayo. It's just like, can we ban it? And his response was awesome. So we have that. I interviewed someone who manages Warp Speed at Palantir. I think it's 7 to 8 interviews. I interviewed a Databricks guy on Palantir's Databricks partnership. So a lot of good content coming out, and probably in the coming week, you guys will be able to see all that stuff. Hood's event is in San Francisco. I'll be going back to San Francisco. So I'll be there with Tanner and Roy, so that'll be fun. I'll have some other people with me. And they'll hopefully make a market open if they're able to wake up at 5:45. I don't know if they're going to wake up, but if they're up at 5:45, they'll be on the market open. But that'll only be like a day or 2 days max. So I think it won't create too much pain in terms of the overall schedule. Okay, cool. Let's get started. So I think we start off with retail sales data. This came in a little bit worse than expected, 0.2% versus 0.6% expected. However, the reason the market's not tanking on this, and maybe the market does at 9:30, we'll see what happens. But the reason the market's up right now is because this is good for inflation. So the fact that in February, people did not spend as much as they were supposed to spend, or at least as much as the market thought they were going to spend, means that people are cutting back. People aren't spending as much. Why is that good? Well, we need inflation to come down. That CPI and PPI report we got last week was really good. I mean, those were two phenomenal reports. I don't think anyone expected it to be as low as it was, especially on the core. On the core, we went negative for the first time in like 7 months. So inflation is, at least from the numbers, coming down. Now you just need catalysts in order to continue to get it to come down. And retail sales data is one of those catalysts. In terms of the specifics that we had, the things that rose were sales and non-store retailers, health and personal care, food and beverage, general merchandise, and building material. Declines were seen at food services and drinking places, so restaurants, gasoline stations, clothing, motor vehicles, and parts dealers, which makes sense because people aren't buying that many cars right now because cars are getting very expensive. Electronics and appliance stores, and miscellaneous store retailers, along with sporting goods, hobby, musical instrument, bookstores, etc. So kind of your general miscellaneous spending is going down month over month, which in my opinion seems to be relatively good if we want to get inflation to keep coming down. If this number was way hotter than expected, then I do think it would be a little tough to see the probability for rate cuts go up in May. In March, they're unchanged, but in May, at least they're ticking up just a little bit. Right now in May, we have 23.9%. We need to get that number to 50%. And I think if we get some jobs data that maybe is not the best, or some inflation data that at least shows that it's going down, that would be better. I mean, the Goldilocks zone is if jobs data is solid, meaning people don't lose their jobs, aka we don't slow down growth in the economy, but inflation data meaningfully comes down. That would be the best case scenario, because it's like then the Fed has a justification to cut that is not rooted in the slowing down of the economy, but rather rooted in the slowing down of inflation. But I mean, that's it's a really good Goldilocks zone. I don't know if we get there. We might have to get one to get the other, aka slow down in growth in order to get slow down in inflation. And that's what we're seeing based on the retail sales data currently right now. So nonetheless, that was the data this morning, and that data was very important to try to get us closer to that rate cut. Oh yes, happy St. Patrick's Day. I forgot. Today is St. Patrick's Day. So for those who celebrate that, happy St. Patty's Day for everybody. My cousin is actually, today's his birthday. He's in India. He was born on March 17th. So yeah, he was born on St. Patrick's Day, but yeah, for those that celebrate that, I think New York and Chicago have the biggest parades for San Francisco, or not for San Francisco, for St. Patty's Day. San Francisco also has a parade, but like Chicago has this like green, like they make this whole body of water green, right? I think I saw some pictures of that over the weekend. But yeah, Chicago, New York, and SF celebrate. Yeah, Dragos is in Chicago. He should know about it. Yeah, there we go. It's not my birthday today. Thank you for the way. It's my cousin's birthday, so it's not my birthday. Yeah, the river, correct. That is correct. Yeah, I've never really celebrated St. Patrick's Day. I'm not Irish. Now, granted, you don't have to be Irish to celebrate it, because it's kind of one of those holidays where people just get drunk, right? Like it's an excuse to get drunk. So if you went out this weekend, hopefully you enjoyed. Speaking of someone else who enjoyed this weekend, or at least enjoyed last week. We got Saylor, who bought 130 Bitcoin, and it kind of feels like a joke, because this guy usually acquires 2 to 3 Bitcoin, or 2 to 3 billion worth of Bitcoin at a time. But somehow he found $11 million underneath his sofa, most likely. I'm still confused where he got the $11 million from, because it's too small to do an at the money offering. So, I mean, I guess they had $11 million lying around, 130 Bitcoin, 82,000 a coin. They spent $2 billion at 97,000. So they kind of spent a decent chunk on the last uptick for Bitcoin. But Saylor continues to buy. And I guess he will keep buying as much as he can, no matter what the price is. In terms of Bitcoin as just an asset class right now, again, I do think that the ETFs are draining a lot of it, and that's what's hurting Bitcoin the most, is just that there's not a real bidder at 83,000. There's not someone who's stepping up and meaningfully buying a ton of it right now. The ETFs aren't doing it. The US government isn't doing it. Saylor is trying with 130 Bitcoin, but it's just not enough. I think we need to get into a risk-on environment, and I think there's some pieces of data to show that we can get back to that risk-on environment, but until we do, I mean, if we can even hold 83, to me, that's a win. So I think that's kind of the state of what's going on with Bitcoin right now. But I think IBIT as a DCA and then selling calls against it isn't the worst thing in the world. I like IBIT over general Bitcoin because you can sell calls against your IBIT. So there are good premiums on IBIT because people tend to buy juiced up calls for Bitcoin related assets. And so I don't think that's the worst thing in the world if that's one way you want to play it. Benny says, Amit, if Bitcoin isn't above 96,000 by MicroStrategy Q1 earnings, then it will no longer be available for S&P inclusion. Okay, so I'm assuming that means the market cap of MicroStrategy won't be available, won't be ready based on a fair value accounting basis, right? Based on those FASB rules. If that's true, then yeah, MicroStrategy doesn't have a shot to get in Q1. But the interesting thing is, I don't know if the S&P committee wants MicroStrategy to be in the S&P 500. I mean, at the end of the day, this isn't like a guaranteed thing just because you hit the requirements. The committee has to allow you in, and the volatility of Bitcoin or in relationship to MicroStrategy's net asset value premium, I think it's something the committee has to think about deeply if they want to be in the S&P 500, just because it makes the S&P 500 more volatile as well. So I don't know. Even if they meet the requirements, it's going to be interesting to see if the committee actually decides that they deserve to get in. And even if they do get in, dude, I don't think that's a big pump on MSTR stock. I mean, at the end of the day, MSTR goes up and down based on Bitcoin's price. So like, yeah, let's say they get in, MSTR right here down 1.4%. Let's say they get in, some people buy it for a day, but like at the end of the day, if Bitcoin goes down, then they'll just sell it. So to me, it's really rooted in the quality of how fast this price appreciates or depreciates when it comes to Bitcoin. Okay, taking a look at the pre-markets, Rocket Lab is up 2%, SoFi is up 0.6%, Nvidia at 123. Nvidia showing some real signs of life. It ended up 5% on Friday, right now at 123.10. That's up 1%. Robinhood showing some signs of life as well, 39.65. Maybe we crack that $40 range today. We'll see, but it's up 1.3%. It was up 9% on Friday. Google, 1.68%. S&P 500 up just slightly in the pre-markets. It was up 2% on Friday, again, the best day in 2025 for the S&P 500. Snowflake is up. ServiceNow is up. Celsius is up. HIMS is up. Meta is up right now. Like pretty much everything's green. What's not green? Verizon. So a little bit of those value stocks getting hit. Best Buy, not green. Mercado Libre, not green. Nubank is green. Grab is green, getting a little bit of a bid right here, up about 1.36% at 446. And then you got Palantir that has announced about 20 different commercial partnerships over the past basically 48 hours, up 3.4%. I'm going to review a lot more of those commercial partnerships later and on the daily recap, but there's a lot of them. And I was talking to Lisa Gordon, who is the head of press, the head of PR at Palantir. She's been there for like 15 years. So she's managed their communications for a long time. And it was so funny because I was like, hey, like you didn't give me any press releases to talk about for 2 months. And she started laughing. She was like, our strategy was to just like bombard everybody with them in March. And I was like, it's a good strategy. It's a good strategy. I mean, like the fact that there was so many in March, it just like it feels like the commercial momentum is just massive. And they kind of just wanted to front load it before AIPCon. So makes a lot of sense, and it seems like we got tons and tons and tons of momentum. Robinhood just announced March Madness betting. Hold on, did they? Did they do that? Did Vlad actually give us March Madness betting? Hold on. That would be crazy. Wait, is that fake news or did they actually do that? That would be so dope if they did that. Oh shit, they did that. Holy crap. You can now trade contracts on the men and women's college basketball tournaments. Whoa. Yo, that's dope. That's dope. That is dope. They probably got their lawyers ready to handle any objection from the CFTC that stopped them from doing the Super Bowl contracts. Whoa, this is cool. Hold on, you can do your own bracket. How college basketball contracts works. Now you can trade on the outcome of every matchup in the men's and women's college basketball tournaments, including the final championships. Get $1 for each contract you own if your team wins, and nothing if they don't. You can also close your position at any time before each matchup ends. Yo, the amount of engagement that is going to happen on Robinhood because of this, holy crap, bro. Dude, I forgot. You know how I knew the NCAA tournament was starting? Steve called me yesterday. He was like, yeah, I'm getting ready for the NCAA. I was like, wait, that's starting? I was like, oh yeah, it's almost the end of March. Like that's when it starts, right? And so this is the most engaging part of basketball. This is more engaging than the NBA finals, to be honest. Like people really get obsessed with the March Madness bracket for the men's and women college teams. And now Robinhood's taking advantage of that. All right, pretty cool. Pretty cool. Scott says Duke is winning it all. That's what Steve said. Steve said Duke has a good chance to win it all as well. I don't keep up with the teams, but I know Duke, Kentucky, Kansas, those are some of the main teams that have won historically. 39.74, 39.80 on Hood, up 1.43%. It hit 39.99 at one point. Does it deserve to go up on this news? I mean, look, in March, in the gold event, in about 10 days, we're going to get a crap ton of new product updates. I'll be at the event, so I'll be covering it live, but I think there's going to be a lot of different updates, and the street could get excited about that. Number two, it's still down a good chunk from 65 off of, a momentum downturn, not really a fundamental downturn. It's not like they announced anything that would say their earnings growth is not going to be that good because the February metrics were good. And then number three, I mean, Super Bowl contracts should be able to, even if Robinhood makes 1 penny per contract, if you get hundreds of millions of contracts traded, and it's not just the Super Bowl, it's like every single day there's a new matchup. So there legitimately could be tens of millions of contracts traded a day if they can scale it effectively. This should produce a good chunk of revenue on the side that can boost their earnings updates as well. And I would imagine the margin on these contracts are like 90%, right? Like I don't think they're losing that much per penny that they bring in. So this is, I could definitely see this as a reason why HOOD's going up. Now, in general, if the macro takes a hit, we get some bad news this week, whatever it may be, then this is not going to matter because Robinhood is still a proxy towards the bullishness of the market getting back to where it was before this 3-week collapse that we saw. But I definitely see it as a headline that can move Robinhood, which is what we're seeing right now. Robinhood up 1.15%. Palantir right here up 2.9%. Bitcoin tanking just a little bit. It was at 84. Now it's at 82.9. So you got a little bit of a red candle there on Bitcoin. Not bad. Not bad at all. And now see, here's the thing. If Robinhood continues to be able to introduce sports betting contracts, they're going to become a competitor to DraftKings. To an extent, right? You're probably not going to be betting on literally how many points this person is going to have in the game. But if you're betting on the outcome of results or outcome of events, and those results are rooted in these event contracts, this could be very, very bullish for HOOD. Final thing on HOOD, and then I'm going to look at some charts. Robinhood, we talked about this on Friday. They are bringing back the 2% transfer. So if you've got money on Schwab or Fidelity and you want 2% on it, you can do that now until the end of March. So like in the next 13 days, one of my friends, Mike, who used to hate Robinhood, even he decided he is transferring because like 2% is just too good. So he's transferring his Roth, he's transferring his regular account. And I posted this over the weekend. I just said, hey, a lot of people are transferring based on what I'm seeing. And I got a lot more comments of people saying they're transferring. So I don't know how much money this is going to bring in, but I would imagine couple $100 million to $1 billion of assets are going to come to Robinhood just based on this 2% transfer. And the reason I think this is innovative, people think, oh, it's just free money. The only reason they're able to give quote unquote free money is because they've done the R&D, the cohort analysis, and quite frankly, have the unit economics of 90% fixed costs, which is based on innovation, right? They've had to completely vertically integrate the entire tech stack to be able to get those fixed costs to be able to afford to give this 2%. So to me, it's not that the 2% is innovative. That's just free money. But it's what they've done to be able to create the economic infrastructure to afford being able to give that 2% in a way that still allows them to be profitable. That to me is the most exciting thing about this. And no other brokerage is doing it because they haven't done that R&D. They haven't had the ability to. It's not like Schwab doesn't have the money to do this. It's that they don't have the tech culture to be able to actually put out a campaign and meaningfully look at the results and make sure that they don't go bankrupt doing this. So I think that's the most exciting part about them being able to still get this done. Is betting allowed in California? I don't know. I mean, based on these event contracts, it's not really sports betting. It's events futures contracts. So I think it's not banned anywhere. So I feel like they'll be able to do it, but I guess we'll find out as they officially roll this out. Okay, cool. Let's get into some macro charts that I saw last night that I thought were actually very interesting and will fill everyone with a ton of hopium, hopefully. So first of all, this was the chart of the week by Fundstrat. I thought this was a very, very interesting chart because, well, it says we're going to go up 20%. So that's why I thought it was interesting. I was like, oh, wow. A chart that says we're gonna moon. That makes me happy. So this is the point of the chart. Every time we've had a 10% correction, which was very fast. What do I define as fast, or what does Fundstrat Tom Lee define as fast? He defines 20 days or less. 20 days or less when we've had a 10% correction from peak to trough. 6 out of 6 times, the S&P 500 12 months later was up 21%, 20.8%. 1 month later, it was up on average 2.9%, 3 months, 8.2%, 6 months, 15%, 12 months, 20.8%. So in the previous 6 times we had a 10% correction within 20 days. It was COVID. It was the trade war in 2018. It was Eisenhower had a heart attack in 1955. It was the Korean War in 1950. It was the Volcker shock in 1979. And it was the Asian financial crisis in 1997. And this time it was, I guess you can chalk it up to Trump tariff tweeting for that really is how you would define it, right? Like you look at COVID, the trade war, Korean War, and then Trump tariff tweeting. That would be the way we define 219 to 311 of 2025 as the seventh 10% decline in the fastest period ever, which would be 20 days. A year later, we're up 21%. So if historically we continue to go down that route, then maybe, just maybe, there is a shot that this correction is done with. And because this correction theoretically could be done with, that means we have room to go higher. Now, here is some counter data to manage some of the bullishness with some bearishness as well, which is the NASDAQ completed a rare 4-week losing streak, dropping 2% each week. This has only happened 7 times since 1970. Historically, data shows that this pattern typically leads to continued weakness over the next 2 to 3 months, meaning that the next 2 to 3 months could be choppy. Now, granted, it's not necessarily conflicting with the other piece of data because the other piece of data says, hey, in the next 12 months, we're still going to be up. Even on this chart with the NASDAQ going down 4 weeks in a row, the 12-month return on the NASDAQ is 8%. So I know maybe we don't get 21% like on that S&P 500 chart. Maybe we only get 8%, but that's still, relatively higher from where we are right now. All the signs are pointing to choppiness in the short term with the type of velocity of speed that we had going down, whether it was on the NASDAQ or the S&P 500. But it also does show that the recovery a year later, based on how fast that decline is, tends to be up because most people just buy that dip, and that dip gets to the point where valuations like Nvidia gets to 104, which it becomes egregiously attractive, and money steps in. Money market funds last week actually lost $1 billion. I was surprised by that. Money market funds, I know $1 billion isn't a lot of money, but the fact that they decreased by $1 billion and they didn't add to the money market funds, meaning cash didn't leave markets and go to the sidelines because of how scared they were, it kind of shows a little bit of peak fear. And even money from money market funds was like, all right, this is stupid. We're at least going to, nibble in on this dip. And maybe that's some of the momentum we saw last week as well, at least on Thursday and Friday, to get some of that momentum. So does that mean buy the dip? I don't know if that means buy the dip. I do think that means nibble at the dip. If you have 20 grand to buy the dip, maybe you spend 2 grand out of it, right? 10%, and just start to slowly nibble in. I think a couple years from now, this dip isn't seen like anything too crazy, but a couple months from now, it could be worse. And that's something that I don't think we can be excited enough to say we've called the bottom, just given you don't know what Trump's going to tweet tomorrow, dude. And I just feel like until the markets are completely desensitized to it, one of the reasons Friday was green is because Trump didn't say anything about tariffs. And so markets didn't have anything to react to. Today, you just don't know. April 2nd, by the way, is going to be a very important day. That's when the tariffs go into effect on Canada and Mexico. And maybe the markets are just assuming that that's going to be delayed again, and hopefully it is. But I don't think that's something we can necessarily ignore going into the next coming weeks. Now, Mike Wilson, who historically has been rather bearish, he published a piece from Morgan Stanley saying the correction might be over. He said, in short, we stand by our view that 5,500 on the S&P 500 should provide support for a tradable rally led by the lower quality, higher beta stocks that have sold off the most, as it looks and may have started on Friday after the S&P 500 traded at 5,505 on Thursday. The important question is whether such a rally is likely to extend into something more durable and mark the end of the volatility we've seen year to date. The short answer is probably not. First, from a technical standpoint, the major indices have suffered significant damage, more than we witnessed in the recent 10% corrections like last summer's. More specifically, the S&P 500, NASDAQ, and Russell growth and value indices have all traded straight through their respective 200-day moving averages, now making these levels resistance rather than support. Meanwhile, many stocks are closer to a 20% correction, some stocks really 30 to 40%, with the lower quality Russell 2000 falling below its 200-week moving average for the first time since the 2022-2023 bear market. At a minimum, this kind of technical damage will take time to repair if it doesn't lead to more price degradation at the index level, basically saying, hey, we could see a rebound to the 200-day moving average on the S&P from 5,500 to 5,700, but that does not mean we are out of the blue. Right? That does not mean that we are going to be able to meaningfully get out of the issues that we're having in the context of the downside momentum that, Mike Wilson has a fair point. It's like, you're not just going to repair the 10% down based on like this August 5th type of recovery. Now, if that does happen, the question is, what has the market found out that is easy enough for them to overlook, right? Because on August 5th, it was Japanese yen carry trade was stupid. Like it was a thing and then it wasn't a thing. So the markets were able to overlook it. This tariff stuff isn't necessarily stupid, even though it feels stupid. It's not fully recovered yet. And if it's not fully recovered yet, then I think there's still going to be some issues in regards to how we navigate the tradableness of this rally. But it is tradable. It could actually be tradable, which is what we're seeing right now, right? I mean, like we're seeing a nice little green pre-market. I think there's going to be a lot of traders that step in. Tesla's down though. Why is Tesla down? You would think Tesla would move with all these growth stocks. It's down 1.25%. It was up 4% on Friday. Maybe there's a headline on Tesla, but outside of that, everything else is relatively green on this pre-market. Okay, Ed Yardeni, he is one of the biggest bulls on Wall Street. He had a $7,000 price target. He has reduced that $7,000 to $6,400. This is another sign of either a bottom because you got bulls capitulating, or it's a sign of like things are getting aggressively worse because you got bulls saying, hey, our targets were way too aggressive. Here's what he has to say on the current state of his target.
Because of what is happening with tariffs right now?
Absolutely, and that obviously relates to valuation. Valuation has been stretched, everybody knows that, but the outlook for the economy was pretty good until we got hit by this tariff issue. And it looks like it's not going to go away anytime soon. So surely valuations aren't going to stay as high. And they have, in fact, come down for the Magnificent Seven. They're down from 30 to 25. For the S&P 500, they're down from 22 to 20. So I've adjusted for valuation. I still think the economy is going to prove to be resilient as it has been for the past 3 years. And if that's the case, then the earnings story should hold up, but the valuation story is not as strong.
Directly because of additional prices that might work their way into erode manufacturers' margins?
Well,
or because of an economic slowdown?
Yeah, good point, Becky. I mean, 2 weeks ago, we raised the subjective odds of a recession from 20% to 35%. So, I'm realistic. I look at the data. We are saying that the tariff issue is unnerving consumers. And they are concerned that the price outlook isn't for them to come down. I think the president has scored some good points here in terms of seeing energy prices coming down somewhat. Mm-hmm. Clearly, the tariffs have worked with regards to pressuring Mexico to deal with the southern border. And another important development here is that with all the turmoil on tariffs, there has been some really good consequences for the rest of the world. China is actually stimulating the consumers, which is what American policymakers have been trying to get the Chinese to do for a long time. And the same thing with regards to Europeans.
Spending more money.
So, yeah. Which then gets into explaining why the bond yield is so sticky here at 4.3%, because bond yields are going up around the world. So, I think America is exceptional in many ways. One of the ways is we have a lot of debt, we have big deficits, and now the rest of the world is joining us in that regard. So they're going to have some exceptional deficits and debt, and that's actually a positive, at least in the short term, for global economic growth.
And I should point out that 6,400 for the S&P 500 is still a long way from where it is today at 5,600. Yeah. So you're still looking for gains at the year. When do those gains start to pick up? You think we've hit the market bottom yet? Well,
I thought late last year, early this year, that the market would be choppy in the first half of the year. It's chopped us up pretty good. But I think by the second half of the year, a lot of the uncertainties about tariffs, I think there'll be negotiations going on. Some of them will lead to lower tariffs instead of higher tariffs. And I think by the second half of the year, we'll see the economy continue to prove its resilience, earnings hanging in there pretty well. And so I think the second half is when the market moves ahead to new record highs.
I mean, theoretically, most countries that still have large tariffs against us or levied on us are not in a position to pick a fight with us. And the reciprocal deal, the end result could be some of those tariffs are either cut or taken off completely.
Exactly. And I think that's, it's conceivable that the market is bottoming now, anticipating all that, because everybody knows that you don't want to go long in the market, or you don't want to be buying when April 2nd, we're going to have a slew of reciprocal tariffs, and the president will be talking about them. I've observed of late that any day where the president doesn't talk about tariffs is a good day for the market, and that's why Friday was up, because he wasn't talking about it. But I'm also saying that despite the fact that he's continuing to hammer home the tariff issue, the market is down some today, but so far it doesn't look like it's going to be a terrible day.
So again, this kind of argument by Yardeni around this idea around tariffs, right? Like Friday was a good day because we didn't have any volatility when it came to Trump talking about tariffs. But now, you don't know. April 2nd, there's going to be reciprocal tariffs if Trump allows the current tariffs on Mexico and Canada to go through. And again, they were delayed for a reason. A lot of the car companies called him up and said, hey, bro, like we need some more time. And so do they call him up again on April 2nd and say, we really can't afford to have these tariffs? And if it gets delayed, I think that's a good thing. If it doesn't get delayed, then there's going to be reciprocal tariffs by Canada and Mexico. And so I think we're going to have to see how that plays out on April 2nd, which is basically in 2 weeks. So I don't know. I mean, like buying the dip right here might feel fun because you're like, all right, we're finally back in an uptrend, and it makes sense, especially when you look at some of these valuations. But we've seen valuations get pretty aggressively destroyed to the downside, even if it was irrational, but it was based on the short-term momentum of the market just feeling afraid of what would happen when it comes to tariffs. Like, I don't think SoFi should be at $12. So if I got to $10.80 at one point last week, like I just think that's a little dumb for SoFi. It's up right now, but it could get to those irrational levels again. 1065 is where it got to if this tariff volatility continues to be what it is. S&P just went red in the pre-market. It's down just a little bit. We'll see in the next 10 minutes how we open up. Robinhood's still up 1.53%, 39.84. Palantir's up 3%. We just got a new interview by Palantir, guys. I think I'll pull that up right here. Bloomberg. This is different from the Fox Business interview. This is Dr. Karp and R1 CEO interviewing together. Let me pull it up right here, and let's take a look at that. Palantir just posted this on their Twitter.
R37, it's an advanced AI lab already out there in the wild, but it's revolutionizing, you say, healthcare, but from a financial performance perspective. Just outline what the actual problem is here that you're trying to solve.
Well, very happy to be here. So what Ontology and Foundry will allow you to do with large language models is transform an institution and take it from a great to a dominant organization. And what is so exciting about our partnership is they are the world's experts in what they do. So figuring out how to deal billing is a super complex LLM appropriate use case. And with our Ontology, I think we can change the unit economics together of the business by in the range of my estimation, 50%. But I would say one of the things that's super exciting about changing 20% of de facto the U.S. healthcare system rapidly is the partnership. I mean, these are world-class players. They have ambition like almost no company you ever meet. And, you know, we love ambition. We're not fighting to win, lose. We're fighting to dominate. And this is an exceedingly important company. And we're super enthusiastic about, you know, our partnership.
Those costs are significant when over 160 billion per year is spent on RCM. So Joe, I sort of go to you and tell us, I mean, as we mentioned, the lab is actually up running. What has this partnership already delivered from your perspective? What's unique about the way in which the engineering talents are working together?
Yeah, a couple of things. And it might be helpful for the audience just to explain the current state of operation, to put in perspective what problem we're solving. And I would dimension that the following ways. Essentially, it costs physicians or providers every $100 of revenue, they spend $4 to get paid for that revenue. And when you extrapolate that across the system, that's $160 billion of spend. Maybe more importantly, we estimate they deliver $200 billion of services, of care, that they don't get paid for because of mistakes, defects in the process. And ultimately, that system of operation results in physicians spending way too much time administratively and patients completely confused at the point where they need clarity most. And so that is the problem that this partnership aims to solve. And when you think about what are the attributes of this partnership and why are we so excited to have the opportunity to partner with Palantir, I would highlight a couple things. The first thing is today's current technology architecture, and we build a lot of technology, just is not designed to harness the opportunity here. The ability to orchestrate, configure, and inject this intelligence into the enterprise. From our perspective, Palantir's platform is very, very unique. And we're super excited to put our talent with their talent, with maniacal focus, and as Dr. Karp said, ambition and a shared mindset that speed matters. And that's really what are the seeds of what we think is the redefinition of this process for the industry.
You're redefining.
The thing, AI is in an abstract form, not useful. And it's really, and so there was a massive marketing surge over the last couple of years and to just basically give people naked models. And those naked models really have performed very, very poorly. And so what people don't understand though is the combination of deep technical expertise in a field and large language models, especially where there are complex rules and human knowledge involved, can transform an industry very, very, very quickly. And what this partnership is going to be a shot over the bow, because what you're going to see rapidly is a business that's very complex, and because of the complexity, it is very intense on the front line, and people are not always getting. It's going to be transformed where the users are going to get better outputs, and the economics of the business are going to simultaneously be much better. And this is like the equivalent, basically, of like transformational. It's happening all over our company, in our government, in our country, in our government, and here. And I see this as a lightning rod.
Yeah.
And we have the best partners. They're very, very sophisticated in what they do, and the use case is way too complex to be done by anything besides basically our managing of LLMs, or what we call our ontology, and then the actual business acuity that they have.
Dr. Karp,
it's just
well, go broader than revenue cycle management here. You're talking about how ultimately the government is looking at stripping costs across the board, and they're eyeing the healthcare system.
There's these
what more could you do?
conditions now. The thing is, people who are basically anti-reform, whether it's like anti-Doge people or anti-tech people in corporate life, everyone has their excuse. Many companies are just like, yeah, I'd rather, basically have a steak dinner with some model provider and feel cool, and it doesn't work. And then you have the government version, which is, oh, we can do no reform. The whole thing has to suck. What at a high level, what America is going through, and this is going to be an absolute a crucial example of this, is you're going to get the system to work much better at a lower cost. And this is a macro trend that is unstoppable, which basically means those that actually run together are going to take over the whole market. Like my version of this is the care and the unit economics are going to be so much better. They're going to take over the whole market.
Joe,
Okay, we got 3 minutes into the market open, so we're going to end that interview there. There's 3 minutes left in that, or 4 minutes left in that interview. You can watch it on Palantir's X. I'm sure they'll be posting it on YouTube soon. But essentially, R1 is a healthcare lab. And so Karp at AIPCon was doing an interview with the CEO of R1 to talk about how Palantir's AI is going to be integrating with that healthcare lab. Again, kind of making the same argument around how healthcare relies on not only unit economics for the hospital to make a profit, but also the patient care. And one of the ways to have really good patient care is if you can get a patient in and out as quick as possible. A, that's good for the patient. B, that's good for the scheduling and the ability to get more patients in beds in a hospital. You need AI to do that. I'm sure there's other elements of this partnership as well. And I didn't read too much into the R1 partnership because there was like 20 partnerships over the past week. So I'm going to go through that. But it does seem like more and more companies are recognizing they need an operating system for a lot of the different inefficiencies in their operations. And that's where Palantir gets exciting. Broadcom's down 4%. I have no idea why Broadcom's getting hit right here. Tesla's down 2%. You guys are talking about that Mark Rober video. I didn't watch the video, but I did hear that the Mark Rober video, if you don't know what I'm talking about, he put out some video basically saying FSD sucks. From my understanding, the video is really bad. Like it's like making up really cherry-picked hypothetical examples to show that FSD doesn't work. Stuff that would never happen. I mean, I had an FSD ride for 40 minutes yesterday, and I had 0 interventions. So like whatever random scenarios he came up with for why FSD sucks, maybe that's why the stock is getting hit 2% right here. But I don't know if it's that realistic. Broadcom, I don't know what the headline is. Why is Broadcom down 4%? Nvidia is Nvidia getting hit as well? Yeah, Nvidia just went down about 1% from where it was. It's still green, but it was closer to 124. Now it's at 122.7. I don't see any headline on Broadcom, but I think there has to be something. I don't think it's random. That's a pretty big company for it to get hit 4%. I guess we'll see what happens when we open. How many seconds do we have? We have about 45 seconds until this market opens. Oh, Google is reportedly teaming up with MediaTek for its next AI chips, aiming to cut costs and lessen reliance on Broadcom. That's the headline. Google is seemingly not going to be using Broadcom as much. That's the headline. I don't know if that's enough to keep it down 4 to 5%. That's why the stock market is so fun. You get this random headline and then boom, your net worth could go down 4% or up 4%. So there you go. I guess we'll see when the market opens if that headline has any weight or if that really matters in the context of Broadcom. All right, here we go. 15 seconds. We have not rang the big bell for what seems like forever. So I'm very excited to ring the big bell again. Thank you, everybody, for being here. We're back with the bricks, back in the studio. And once again, on Monday, March 17th, 9:30 a.m., the stock market is now open. Wake your ass up. Let's see if we can continue the green momentum from Friday. Robinhood goes red as we open up in the pre-market. So Robinhood not continuing that momentum yet. Grab is up 2%. Broadcom down 3%. Nvidia, oh my God, 5 red candles. It is quickly losing its steam. Looked like it was about to touch 124 in the pre-markets. Let's see if that has a reversal. Palantir was also up almost 4%. Now it's up 1.5%. So pretty much everything, at least losing some of the momentum it had in the pre-markets. Yeah, look at Robinhood, dude. It's about to go below 39. I mean, this thing was touching 40 in the pre. It's just you can't trust the pre-markets. You just can't. And I know that's always been true, but like in 2024, when everything was green, it just like stayed green. But now it's a different market, and that's just not the case. Costco's down. Amazon's about to go red. Tesla. Is this really because of the Mark Rober video? Is this really because of that video? Like that feels kind of stupid. Like if down 3% on the Mark Rober video feels a little weird. I feel like there's got to be something else besides that. Rocket Lab's up 1.2%. SoFi goes red. S&P basically flat to red, 0.0% on the S&P. Snowflake's red. ServiceNow is red. HIMS is red. All of these were up in the pre-market. D-Wave, Quantum, that's up 4%. That had a monster day on Friday. It was up like 40%. So that one continuing to do well. Meta is up 0.29%. UiPath is down 1.4%. They fell 20% after earnings last week. Chapato's up 0.24%. SMCI is up 1.92%. Intel actually holding on after that 17% gain it got from getting a new CEO. So that was good. Grab still holding on to 1%. Robinhood, 39.14. Trying to hold on to 39. Palantir, 87.88. Tesla, 241. That's down 3. Where is Broadcom? Broadcom recovering a little bit from 186. Now it's down 2.6% instead of 3.5%. And then Nvidia trying to hold on to 122. It is 7 cents away from going below 122 currently right now. Rob used lane assist instead of FSD. Yeah, I heard of that. I heard he also put up some random wall in the middle of a road. And I'm like, why would, like, do they expect Tesla the FSD to immediately be able to figure out how to navigate that wall? Like, it was just like stuff that I think was a bit unrealistic for real roads. I haven't watched the full video yet. I haven't like looked at it, but the critiques I saw were that it was a botched job at like really trying to disprove FSD. All the airlines are up after having a nasty week last week, along with the cruise lines. IBM's up a little bit. Oh, Affirm's getting hit in a nasty way because Klarna, which is definitely IPOing as per Bloomberg, Walmart dropped Affirm and they picked Klarna for their new buy now pay later partner, which is very weird, bro. Affirm has had that contract for a while, so I don't know why Walmart ditched Affirm for Klarna. Maybe it's something around Klarna's underwriting or their tech, or maybe their Walmart's trying to expand internationally, whatever it may be. But yeah, Affirm's down 10% off losing that contract, and Klarna, that contract's probably going to help them get some more juice for their IPO. I'm not buying the Klarna IPO. I don't think buying a buy now later fintech is that exciting, quite frankly. Like, maybe it's going to do well. I see zero reason to be excited in this environment for a buy now pay later startup. So yeah, it's just not that interesting to me. But that's why Affirm is down. Palantir 86.95. Palantir with a nice little red candle right there, all the way from 89 to 86.9. Rocket Lab still holding on to its green, and Tesla continuing to fall. Looks like it's about to go below 240, down about 3.85% here right now. Oh yeah, was the video sponsored? Did they do this in partnership with a LiDAR company? Did that also happen? Because that just completely takes away credibility for the Mark Rober thing. I think it was sponsored by some company that does LiDAR. I heard that. Wow, 10 million views yesterday. Oh yeah, it is. It's partnered with. Wait, is this a LiDAR company? Is this? Why do I feel like this is a LiDAR company? Sponsored by Luminar. And Luminar is a LiDAR company, right? Yeah, you're right. Luminar Tech. Yeah. Luminar. Thanks to Luminar for allowing us to test their LiDAR-equipped car. Dude, come on, bro. And this is sad because Mark Rober is a big channel. He's a big channel, and you never want to see big channels sell out. This is what I mean, dude. I've been talking about this for years, but content creators, AMD is up 5%. They get to a point where they pick money over their audience. And when it looks like an obvious conflict of interest, like, oh, FSD sucks. And by the way, the video is sponsored by a LiDAR company that is in obvious competition with the concept of FSD. Forget even Tesla, but just the concept of neural nets being able to train a self-driving car. I mean, it's selling out. It's selling out. It's just, and Mark Rober's a big channel. He's been on YouTube for a decade. This guy's racked up billions of views. Like, people trust his takes for science and tech and all that stuff. When you do shit like that, it hurts the brand. It really hurts the brand. Nvidia right here, about to go red, 24 cents away from going red. Affirm now down 12%. Robinhood somehow is holding up. I don't know how Robinhood's holding green, but it's holding green. Palantir as well, holding a little bit of green. Tesla still down 4%. Rocket Lab's up 2%. SoFi still red. S&P going green. Interesting. So Tesla's down. Nvidia looks like it's about to go red, but the S&P is holding up. That means there's other sectors of this market that are green today outside of tech. Is it financials? Are financials up right now? Let me take a look. Financials. No, financials are down. It's got to be something else. AMD right here up 3.9%. First 4% green day on AMD in a while as well. The Tesla video was a fraud. He did not even have FSD active. It was autopilot. Wait, why did he have autopilot instead of FSD? Dude, I didn't watch the video, but every time you guys tell me something new about this video, I'm like, okay, this video seems really stupid. So why was he testing autopilot? Like that's not what Tesla is really even selling. Because FSD would stop. Okay, that's probably why. That makes no sense, bro. Like, Tesla, you don't buy Tesla for the autopilot vision. I mean, cars have had autopilot for years. Like, you buy into that thesis because of FSD. Do they really not test FSD in the? That's insane, bro. That's really crazy, dude. Yeah, I know Kevin said he could get a lawsuit for the video. I don't think Tesla's going to sue him. I mean, I don't know if Tesla really wants to take the time to sue some YouTuber. I don't think it would be crazy for Tesla to sue for defamation. But it would, it'd be an ugly court case, Tesla going after some YouTuber. I mean, I don't think Tesla's really going to go after it. But if it's that manipulated, that is not the best thing in the world. Celsius is up 3%. S&P is up 0.45. So it looks like you got some sectors that are going green. All the crypto stocks are kind of flat. Bitcoin at 83.4. You got a nice green candle from 82.7. All the semis are relatively green except Broadcom, which is recovering from that Google headline. Qualcomm's basically green. TSM's up 1%. Then Lam Research is 0.5% away from going green. Everything else is green. Nvidia, AMD, SMCI, Intel, etc. SaaS names are all green besides Intuit, Twilio, and GitLab. Everything else is green. So that part of the S&P is doing well. And then if we look at healthcare, we are relatively green. Moderna's down, Pfizer's down. They're not down a lot, but they are down. Eli Lilly and Hims are green. Defense is green. Defense has continued to be green for the past couple of weeks with all the volatility we've seen within European defense contractors as well. I mean, I don't know. It's like it's traditional growth stocks are getting hit today, like a Tesla, but the broader market's holding up. Tesla right here down 3%. Maybe we get a recovery there. Was the bottom where it hit a low of 238.87 a couple minutes ago, then bounced right from there. Grabs green as well, and then hoodie 39.65, up 1% on the day. Yes, Robinhood did launch the NCAA contracts for college basketball, so that is one headline that it could be moving on today. And dude, you have a lot of people betting on that. I don't think it's as much as the Super Bowl, but a ton of people bet on college basketball contracts. So if any of them want to use Robinhood to bet, that is now a potential opportunity for them. Palantir right here, 87.75, up 1.79%. SoundHound up 0.65. Rocket Lab up 3. Rocket Lab really catching a bid right here. SoFi as well, up 1%. Then Google. I did buy some Google last week, 165.93. I think I got it at like 165.20. That's up 0.28% currently right now as well. Yeah, Rubrik. I've heard a lot of people talking about this one. This one's also been getting a pump. This one's up 1% on the day. Yeah, they had a nice move. Look at that from what is this? 55 to 71. Apparently they had earnings, right? I think that's what they had. This is a SaaS company, if I'm not wrong. $13 billion market cap. Jason actually worked with them. He'll be on Technical Tuesday tomorrow, but he worked with them in the past, and he did have some good words to say about this company. So we'll get his opinion on it tomorrow. But I do not know a ton about this one right now. What's your take on Netflix? It's up almost 4%. Well, my take historically on Netflix has been dead wrong every time. I've just accepted that Netflix is the only winner in streaming because they're profitable and they can continuously come up with the best content. They don't have to depend on licensing content. They can actually make their own content. So I got Netflix wrong for the past couple of years, but look, I'm not buying it at a $400 billion market cap, even though 5 years from now, it's probably higher, but I just think there's better opportunities that I like than Netflix. Like if you have a position, I don't think there's a reason to sell, but if you don't have a position, buying into it at, 39 times earnings when Nvidia is at 27 times, it's just like, I don't know. I don't feel like it's the most amazing opportunity, but they are the only streamer that has proven they can win. They can come up with original content and they can do it profitably. And if they get into more live streaming stuff with WWE and more sports, I mean, it doesn't seem like they're slowing down anytime soon. So Doug did call Netflix getting back into the Max 7. That was his prediction on the New Year's Eve show. Doug said Netflix is going to be back into that big tech conversation, and so far this year they've done pretty good. Why is AMD up? I have no idea why AMD is up, but it is up 4%. Let me see if there's any headline on AMD. There's a lot of people in the AMD trade still. I mean, people have not lost hope on AMD, and most people started buying into this at 130. So I would imagine if we get a reversal on AMD, a lot of people are going to be excited about that one. Yeah, there's no headlines. It feels technical. No headlines from what I'm looking at right here. Okay, let's ask in the chat if you guys think this is a dead cat or not. From Friday, even if individual stocks aren't really green. Dead cat bounce or no? Let's see what people think. I don't know, dude. I don't want to say it's necessarily a dead cat. I do want to say that I feel the volatility from whatever Trump may say into April 2nd could make it worse, which is why it could be dead cattish. But I don't know. Do you think Nvidia 122 is insane? Right? It comes down to valuations at the end of the day. And Nvidia at 104 might have seemed insane from a cheap perspective. At 122, is it egregiously expensive? I don't think so. At 28 times earnings. So, if Nvidia wants to go back into the 130s, I don't think that's unreasonable right now. It's just, are there enough headlines to allow it to easily happen? Tesla also trying to recover. It was at 238. Now it's at 243, only down 2% on the day. It was down almost 5%. Grabs back at 450, which is nice. Robinhood, wow, look at that, $40. There we go. Back to 40 on hoodie. It's been about, how long has it been since we touched 40? It's been basically 7 days. Hasn't been too long, but still. It's nice to see us back at that $40 range. We got to hold it. That's the part I'm worried about in this market, but at least it's showing that if you bought in that 34 range, maybe you got some momentum. The 10-year isn't below 3.5%, so DJT isn't done intentionally tanking the market. Well, yeah, that's also true. The 10-year is being still pretty stubborn at 4.3, even after a really good CPI and PPI. Like after a great CPI and PPI, the 10-year being stubborn. And the reason I hesitate to be so excited about this bounce is because if you look at crashes historically, there are many rallies in between before we actually hit a bottom. And although there's a lot of bottom indicators for what I saw last week, again, none of them had to deal with the constant tweeting of Trump putting out something that could totally flip the narrative. And also none of them had to deal with the Secretary Treasury, with the Treasury Secretary, that basically is admitting that we have to go through a correction and that corrections are healthy. Here's what Scott Bessent said yesterday about the stock market correction.
Worst week for the market in 2 years. Does that worry you, Mr. Secretary?
Not at all. I've been in the investment business for 35 years, and I can tell you that corrections are healthy. They're normal. What's not healthy is straight up that you get these euphoric markets. That's how you get a financial crisis. It would have been much healthier if someone had put the brakes on in 06, 07. We wouldn't have had the problems in 08. So I'm not worried about the market.
Let's talk about what happened in the stock market this week.
Now, look, I don't really disagree with him there. I actually don't disagree with him. He is right. Like as a sort of abstract idea, he is 1000% correct. Stock markets going up, Nvidia just turned red, by the way, consistently is not healthy. And you need to put a break on something. And if we did put a break in 2006, 2007, maybe we would avoided the great financial crisis. The question is, why are we putting a break on the current state of the market? And you either believe this administration or you don't. This administration is saying that the government is spending like crazy. A lot of these momentum-driven rallies in the market are fueled by government spending, which means it's not real momentum based on earnings. The multiple is expanded simply because the government won't stop spending. And so until we solve that issue, we won't have a real economy. That's essentially what Bessent, Lutnick, and Trump have been trying to tell us. You either agree with that or disagree with that. And if you disagree with that, then you might think they are deploying the wrong strategy. If you agree with that, you might just have to settle into that short-term pain for long-term gain type of thesis. And that would define if you buy these dips or you don't buy these dips. Here's a little bit more of Bessent basically talking about why we need to get our spending down on Sunday.
I came out from behind my desk and asked President Trump if I could join the campaign. Then when he asked me to be in the cabinet was because I was so alarmed by this high level of government spending. We've never seen anything like this. Highest level ever when we weren't in a war or in a recession. So the Biden administration relied on this blowout spending. Back to the mainstream media, no one criticized it when they were doing it because it was for the great and the good. It was for green programs. It was for this. It was for overseas engagement. Now, what we're trying to do is do a course correction where we bring down the government, we deleverage the government and re-lever the private sector. And we're going to do that by cutting spending, the lowering interest. We'll get a natural lowering of interest rates. And then on the other side, as we re-lever the private sector, we plan to deregulate the banking system, which was one of the things I talked about at the Economic Club of New York last week. So as we...
AKA, we want to make sure that banks can start buying more treasuries. That's what Chris and I talked about a couple of days ago as well, in order to get these yields to come down. Notice what he said. He says, naturally, interest rates will come down. Why? Because we're going to cut spending, which should be able to get the 10-year to come down. Like, this thesis has become so obvious at this point, and they've said it again and again and again, that this is what they are trying to do. The byproduct of that could mean slowing down the economy. Some people say it has to mean slowing down the economy. Or it also could mean a little bit of pain, but not like some massive 2022 type of crash, which I think the Trump administration doesn't really want. But it does mean that, like, yeah, he expects a little bit of a slowdown in order to get these rates to come down. Otherwise, we have to ask the question, how do you get rates to come down? How do you get that 10-year to come down? The only other way is inflation comes down. But the problem there is the only way for inflation to really come down is that you've got to get growth to slow down, which is why the retail sales data this morning was actually bullish, even if it was a miss, because it means that growth is slowing down to an extent. And then the question for all of us as investors is that if the Fed or not the Fed, but the Treasury Secretary, Commerce Secretary, President himself is telling us their objective is to get rates to come down, the 10-year to come down, mortgage rates to come down, et cetera, which requires a slowdown in the economy in order to slow down inflation. The question for all of us as investors is, what impact does that have on our stocks? And how bad of an impact, if the impact is bad, is that going to have on our stocks? Is it 5% down, 10% down? Is it, just flat all year and we don't go up, we don't go down, but at least we stay stable? And no one really knows the answer to that. In the past 3 weeks, it's been down 10% on the S&P. Does it have to go down another 10%? I don't know. And I don't think anyone officially knows exactly how this is going to play out. But we are definitely going to see how, eventually this plays out. Someone says, admit they're not going to be cutting spending. Well, I think that's their goal, right? I mean, eventually we're going to have to see if they are able to do that. Now, Doge, again, has done some things where they've been able to not renew contracts, which in a way is cutting if you're not literally cutting, but you're not renewing contracts that you've had in the past. But I think their goal is to cut as much spending as possible. One way is to cut government employees, which is going to be one way to cut the payroll of what the government is spending on. But the real major spending initiatives, I don't think they've unveiled a full-on hey, this is completely disappearing. But the market's expecting that, or at least they're expecting the market to react to that when they do unveil that, if they unveil it. And I guess over time, we're going to find out if they do that. S&P 500 right here is up 0.37%. Netflix is still up 3%. Tesla still down 3%. Affirm now down almost 13%. Nvidia goes red, was not able to hold 124. Currently right now, it is down just about 1%. Now, here's the thing. If they actually don't cut spending and we get a growth scare, that's when you got a real issue. Because if the deficit increases and we don't have growth and you don't have artificial government spending to pump up what's happening with the deficit, I don't even know what that economy looks like or what that stock market looks like, because I think stocks are going to be really confused in terms of what direction they need to go in. But I think in the next coming months, after April 2nd, with this whole tariff stuff, we're going to see where this plays out. Okay, what else? Let's see what other headlines we've got going on right now. So markets are turning red. S&P is still green, but individual stocks are turning red. Oh, gold. We didn't get to talk about gold on Friday, but gold's above 3,000. Take a look at this. Another $1 billion have flowed into gold ETFs. In February 2025, officially, we had 5.46 billion flow into gold. Let me know if anyone's buying gold or not. Gold has ironically outperformed the S&P over the past 20 years. That stat came out yesterday when you look at the S&P and gold layered over 20 years, which is crazy, right? Gold, this commodity has outperformed the most innovative tech companies over the past 20 years in the S&P. Basically at 3,000 an ounce for gold. And what that means historically is that people are getting scared, right, when they buy gold. It means that there's something that's happening in the underlying economy. There's some type of pain they're looking at. There's some type of weakness they're seeing, even some type of geopolitical instability. We've got a lot of stuff going on with Russia, Ukraine, Israel, Hamas. And so there's so much stuff that could be warranting people to get more excited about gold. One argument also could be that they have no idea what direction the Trump administration is going in regards to interest rates, the 10-year mortgage rates, slowing down the economy, et cetera. And because of that uncertainty, even though the Senate keeps saying what they're going to do, but maybe no one trusts him. Maybe people think Trump's going to change his mind. You buy gold. What is not happening is people are not buying digital gold. I mean, now people are not necessarily selling the crap out of it because we're at 83, which I think is still relatively impressive on Bitcoin. Most people thought we would be at 60,000 by now, but we're holding the 80s. But it does seem like more people are flowing into regular gold here right now. Yes, it also means that the growth in the money supply is more than the growth of companies. That is also correct. People are betting on the fact that we are still inflationary and that the money printer is still going off. That is fair. And that could be another reason why we've outperformed, or why gold's outperformed over the past 20 years. Obviously, individual equities have done, like Nvidia has outperformed gold. Tesla has outperformed gold. But as an aggregate market, the growth of the money supply has helped the S&P continue to remain liquid. But gold has been that hedge that at this point seems to be performing much better over the past 20 years. And I wonder over the next 5 years, which one outperforms, gold or the S&P? And dude, if you asked me that in 2024, it would be obvious, the S&P, look at this tech companies, look at this growth, yada, yada. But I think there is something to the thesis that people were talking about for the past couple of years, which is that a lot of the market was propped up by government spending. And if that spending goes away, which is 30% of GDP, there's going to be some pain. Now, that pain is the right pain to have, in my opinion. You need to get rid of that glut and that fat for the broader markets to actually be efficient. But that is going to be painful. And I think the extent of that pain, none of us have really figured out. S&P is still up 0.5% right here, even with Nvidia going red. So different parts of the market are picking up the slack from tech. Here is a heat map on the market today. Let's pull this up right here. Yeah, it looks like consumer services or consumer utilities or utilities and non-durables are what's holding up the market just a little bit here today. It's not tech, it's not pharma, it's not communications. Yeah, consumer. Your PGs of the world, your Pepsis of the world, retail stocks actually doing okay. Walmart, Home Depot, Berkshire is still relatively green. Everything else is still getting hit. Silver, yeah, silver. So this is another commodity that has been doing well. SLV. That one's down a little bit on the day, but it was at $28 last week, now at $30. So it's getting some momentum right here. Gold's probably down. That's why it's down. Tesla trying to rebound at 244. AMD at 105. That's up 5%. Netflix up 3%. But there are some arguments around silver being the bear market asset that you want to own, as it tends to do well when things get kind of ugly. Amit, did you know your ex tweets had a lot of fake Amit profiles asking to join a private Telegram post? Yes, I can't do anything about it. If you get a fake Amit DM, please just ignore it. The easiest way to check is if they have a verification mark, and if they don't, just go on the profile. It'd be kind of easy to show it's a fake one. Yeah, dude, Elon's got to do something about the bots. He tweeted over the weekend, hey, what can we do to make X better? And everyone was like, please, for the love of God, can you just get the bots to stop being as bad? Like, I will put out a tweet, and within 5 seconds, there's 7 bots that have responded to it already about a Telegram group. And it's just like, it is just bad, bro. It's like really bad. And I feel like they can solve it. There's no way their AI is not good enough to be able to easily see what's a bot tweet and just like remove it. But for some reason they haven't. And that's, you know, one of the most annoying parts of Twitter right now. Nvidia 121. Where's the Russell? The Russell. Wow, the Russell's green. Small caps going green. Small caps are going green. Shout out to Chad. Still believe one of them will build an AIP before you. Yo, Chad has talked so much shit about me not building an AIP. But he doesn't know. Actually, he does know because I told him that I am building an AIP. It's just taking some time for me to officially release when I'm building an AIP. But no, on some serious stuff, like I'm working with someone. We're actually building a small project, I would say. It's nothing too crazy, but something small on AIP. And it's actually pretty cool. So we've been making some progress on it, hopefully like in a month. We were trying to get out before AIPCon, but there was no way we were going to get it out before AIPCon, because that would have been pretty cool at AIPCon to like launch something built on AIP from the community. But yeah, hopefully in like a month we can launch something. And then Chad can stop making fun of me for not building on AIP. But if he gets rid of the bots, Twitter daily users will crater. Yeah, well, that's what people are saying. People are saying that the reason Elon doesn't get rid of the bots is because it's going to decrease engagement, because like most of Twitter is fueled by bots. I would disagree with that. I mean, look, it's definitely going to decrease some engagement. I don't think it's going to decrease a lot of, or even if it does, the engagement will be more quality than quantity, which is, I think, what people care about. And he's not a public company, right? Like Twitter, he doesn't have to report daily active user numbers. So I feel like there's no downside to doing it, but they just haven't done it. And it is insane, because I feel like it's not that hard to solve it. Palantir and X could have a partnership to ban bots. Yeah, that would be nice to see. That would be nice. Chat says so much of FinTwit responses are bots paid for by the creators themselves. Yeah, that's also true, dude. Dude, there's a lot of, you have to, for those that are on Twitter, you have to be very careful when you come across like a finance creator, because a lot of times it's just GPT writing up like their deep dive on Nvidia. They didn't write a single word of it. And then they hire some virtual assistant in Vietnam to respond to every single comment. And the responses are like, oh, wow, interesting. Oh, great. Very important. And it's just like, okay, this account is full of shit. And there's a lot of finance accounts that do that. They think that's their way to grow, to just like GPT some deep dive on Palantir and then copy and paste it. It's like, it's all fake. And you'll fool some people, but Like at the end of the day, people want authenticity. And that's another issue. Creators themselves hire bot farms to be able to engage on their tweets to make it seem like they have engagement. And so I guess that creates another problem with Elon trying to ultimately stop these bot farms. Grab is holding green. Nvidia's red. Broadcom's red. Robin at 40.33. It looks like the market likes their sports betting. And we are green right here. Where's Archer? My Archer interview will probably be out tomorrow, guys. I know a lot of you guys are looking forward to that one. That one's up 6%. I got to interview the CEO of Archer, Adam Goldstein. So you guys will catch that probably on Tuesday. So probably tomorrow. And you guys will see a bunch of those as well. What else? Is this the headline on AMD? AMD reaches 45% GPU market share in Japan. Well, that could be a headline to get AMD up 5%. That could be up. Yeah, that could. I mean, it's a small headline, but maybe the headline's. It's one of the best headlines I've seen in the past couple of weeks on AMD, especially after the earnings. So, looks like that one could be what's leading AMD. Do you still not own any Archer? Correct. I do not own any Archer. I do not own the stock. I think it's a very interesting company. I do not own it. But I think the interview with the CEO hopefully will give everyone who's into Archer a better understanding of the long-term vision. But I personally do not own any Archer. Palantir right here is up 2.7%, 88.64. Again, we got a lot of Palantir partnerships that we're going to be going through throughout the week. I got to speak to Databricks as well. I know a lot of people have been wondering, is Databricks competition for Palantir? How are they going to navigate Databricks when they go public? I talked to the head of Federal, Rory Patterson, at AIPCon. We have that interview. And basically he was like, look, are there some worlds where we compete? Yeah. But more often than not, Palantir's ontology mixed with Databricks' DIP, data intelligence platform, is very symbiotic. And because it's symbiotic and because there's ways that they can work together, in fact, he even said that there were mutual clients that were using Databricks and Palantir separately, and they came up to us and they said, can we just use you guys together? And that's when they came to the conclusion that instead of competing, they might as well just work together because their platforms can layer on top of each other. Are there still some forms of competition? Of course. But it seems more likely than not, customers in the future are just going to use both because they both serve various different types of needs. Databricks with more data processing, Palantir with more of the data analytics with ontology. And as a result, it should be bullish for them. So I think when Databricks goes public, it's not really a question of they're eating Palantir's lunch or they're growing faster than Palantir. It's more so a question of how can they work with Palantir. And guys, I really don't think Palantir is going to be stuck at 30% growth in Q1. I mean, just based on the sheer amount of deals that are all for Q1 that we saw in the past, 72 hours, I think we're going above 30%. It seems kind of obvious to me given all these deals. The question is going to be if we can get closer to 40% by the end of the year, which I put out a video in January saying, I think there's a world we can get to 40%. They guided for 31%. They're the only software company that's growing at 36% as of Q1 with the margins that they have, 60% free cash flow margin. I mean, that's insanity. If they can keep up those margins and get that top line growth, is Palantir still expensive here? Of course, but you are paying a premium for a name that is by itself putting up this type of growth in the entire SaaS marketplace of public companies. Now, a market correction could take it down. We've already seen that, in the past couple of weeks, but I think it's not going to be because Palantir misses on earnings. It's going to be for whatever other macro reason versus Palantir. Oh, Red Cat CEO was awesome. Red Cat. So I got to interview him as well. That interview will be coming out in a couple of days. This dude's a monster, bro. He's had multiple public companies before. He's sold companies in the .com bubble. He's been in the internet forever. And so now his next challenge is defense for drones. And so it was really, really cool catching up with him. And I think a lot of people will enjoy that one. Okay, what else do we have? Any thoughts about Intel? I'm not buying Intel, but look, I guess the new CEO is bullish. So if you own it, that's great. I wouldn't buy Intel here. I think if you had to buy Intel, it was a couple weeks ago before the CEO news. I don't know how the CEO is going to turn around the company. The CEO is a good CEO, and he's turned around companies in the past. So I think that's why the market is having faith. But the thesis on Intel is the same that it's been for the past couple of months at this point. But it's just a question if that new CEO can turn things around. But if you own it from 18, 19, 20, 21, I don't see a reason to sell. If the market likes this new CEO, you got to give him a chance. And maybe in a couple of quarters, he could turn things around. Tesla still down 3%, Grab's up 1%, Hood still holding on to 40. Again, market looks like it likes what those contracts are able to do. Also, that 2% boost on the transfer should be able to bring in more net deposits, which is something the market might like as well. Celsius is up 5%, the S&P 500 up 0.36%. Currently here right now. We got some housing data. We just got some housing data. What did we get? We got the index for, what is it? We got the index for NAHB housing market index came in at 39 versus 42 expected. Okay, let me pull this up right here. So that's a miss, but I think that's good for inflation. The NAHB housing market index in the U.S. declined to 39 in the March of 2025, the lowest in 7 months from 42 in February. Current sales conditions fell 3% to 43. Sales expectations in the next 6 months held steady at 47, while traffic of prospective buyers dropped 5 points to 24. Okay, so basically people aren't buying houses as much. We already knew this. I don't know if the markets are caring that much about that, but we did know that that would be a thing. Until the 10 years comes down, the housing market's still going to be stuck. So Scott Bessent has made that very clear that that's what they are trying to do. Kohler is up right here on the day. That's up 16%. Don't know why that one's up, but that one's up. That one also bought a ton of Bitcoin a while ago. D-Wave, you got your quantum names that are getting some momentum. Rigetti, let's check on that one for quantum. They have GTC coming up, which I think is going to be really important because Jensen is going to be very excited, or I think a lot of the market's going to be very excited to see them on stage with Jensen. D-Wave's up 9%, Quantum's up 14%, Rigetti's down 2%, then IONQ is up 0.24% on the day right now. There's a new investigation into Robinhood, news from TradingView. Dude, how many investigations are we going to have, bro? Thought we were done with our investigations. Let's see. It could be another SEC thing. Here, I don't see it right now. They did close out the previous investigation. They paid their parking ticket a couple of weeks ago. I'll try to find the new one, but might have to pay another parking ticket. Any chance Steve will be coming on this morning? You know what? Let's actually give him a call right now. And let's see if he can pick up. I think he said he can make it this morning. So let's get his perspective on what's going on. S&P is still up 0.31% here right now.
Good morning, Matt.
Steve, good morning. You are live, part of the show today.
Oh, look at that.
Notice I didn't say you were on the market open, so you couldn't say anything smart.
See, I see that. I see that.
Yeah, markets are green. Nvidia's a little red. We haven't talked in a couple of days on the show, so yeah, give me your broad thoughts. What do you think's going on in this market?
I actually just bought more Nvidia about 1 minute ago.
Okay, so you're bullish.
Hard not to be.
Why do you think Nvidia's red but the market's up?
I don't know. Don't really care.
It's funny because we were green in the pre-markets. We were, 124, and then, like always, little tank as soon as the market opens.
Well, we got the big conference coming up, so I'm just trying to get more shares before the conference.
Well, you and a lot of other people are doing that in the pre-market. Okay, so the interview came out with Bessent over the weekend about how he said stock market corrections are healthy and that we need corrections in order to just not have a lot of fat and glut in the system. What is your kind of take on that? And do you think we still need to get some pain in the system?
So I don't know who you're talking about, but corrections are normal. And look, there's a lot of leverage in the market. So things are going to shake out.
Wait, you don't know who Scott Bessent is?
It doesn't ring a bell.
He's the Treasury Secretary.
Doesn't ring a bell, Matt.
Okay. Well, anyway.
I'm messing with you.
Okay, good. I was just like, what?
No, I mean, look, there's a lot of leverage in the market, and it's not just with individuals. There's a lot of funds that use leverage, and while I'm a fan of some of them, I'm not a fan of others. And well, when you have more leverage in the market, there's, in my opinion, less liquidity. So I think it makes it a little bit more volatile, but to me, nothing's really changed. I mean, unless the biggest companies, and even when I say the biggest companies, I'm not just saying the Mag 7, but more broad, down to Coca-Cola and everything else. If you see an overwhelming amount of companies, S&P 500, start re-rating their guidance lower for the year, then I would start to worry. But as long as S&P 500 guidance is in the same area, I'm not too concerned about the market this year. I'm really not.
Okay, so I know you say you're not concerned, but then you get the Trump administration that are telling us we have too much government spending, we need to get a lot of it out of the system. I guess my question is, how can stocks go green if the government is hell-bent on not crashing the market, but getting enough spending out of the system where the byproduct might be that the market takes a breather?
You got to look at where that spending is going to. I mean, once again, if these companies are not lowering their guidance, I'm not too worried about it. We got to see what Q1 brings. Q1's right around the corner. I mean, it's almost April.
It is almost April, right? Like, this year has been moving by quick.
Let's see how Q1 earnings come in. Let's see if guidance for 2025 changes. Because if guidance doesn't change, there's a lot of overreacting going on. If guidance changes, then it's something to worry about. But you got to remember something. People are making long-term decisions every other minute because there's a new data point that comes out every other minute with how fast information flows now. But what does not flow is guidance from these companies. And that's what's going to drive the market ultimately. Everything else is short-term fluctuations.
So
we also have a big FOMC meeting coming up, and I want to see if Powell keeps to his hawkish stance or not.
Well, we know we're not getting a cut on
It's a 98% chance it stays the same.
Yeah, so if we're not getting a cut,
according to CMC.
Yeah, so if we're not getting a cut, the question is going to be, like you said, exactly, what is Powell's stance, hawkish or dovish, on the labor market? If we see weakness in inflation in general, do you expect him to signal that May is more likely to get a cut?
Well, CMG Group is expecting June is the most likely where we get our first cut, and I don't think it matters whether it's May or June. I think that they should have cut already. I think they should definitely cut this week. They're not going to, most likely. But the inflation mandate, so they have a dual mandate. And I've always gotten in arguments with people about this because I think maximum employment is more important than price stability. Because to me, whether CPI is 2%, 3%, or 3.5% is not more important than maximum employment and people having jobs, because you want people to be employed. You don't want people not being employed. And I think the idea of paying 102 versus 103 for something, whether it's groceries or different types of goods or services, doesn't really matter. It is more detrimental to the system when you have more people unemployed. So the Fed needs to change their stance and start looking at maximum employment. And when you have the government, this isn't the first time we've gone through this. Clinton cut hundreds of thousands of jobs from the federal side during his presidency. And you know what? We need to make a business environment where businesses can borrow to expand, or entrepreneurs have an avenue to borrow to start businesses. And we need to start looking at maximum employment rather than living and dying by a decimal point on CPI.
Do you believe in this idea that as we get more rate cuts, as you said, right, business owners, small entrepreneurs, et cetera, have a better cost of borrowing capital, but it kind of creates a cushion for stocks, even if the economy is slowing down. If we do get some cuts, although growth may slow down, at least companies don't have to worry about higher rates to finance capital, which could keep stock prices relatively tame.
I'm less concerned about the market at that point rather than the well-being of the country. And look, a lower rate environment is not bad. it's a good thing. The biggest companies can refinance debt at lower rates and improve margins. The cost of capital comes down. You have less fears about businesses not being able to pay back debt. You have less worries about liquidity in the real estate market. You also have an environment where businesses can expand if they had growth plans on hold. And you have an environment where it's lucrative to try to start a business.
Right.
So I think it's too many benefits for the very few bear cases that somebody could come up with it about, which is ramping inflation, which once again, if inflation goes from 2.8% to 3.8%, I don't think it really matters that much overall in the grand scheme of things if more people have jobs.
Retail sales data came in lower than expected. Do you think there's anything to that or just continuing slow down?
No, why would we be worried about that? You just came off the holiday season. It's not going to be, doesn't matter. Big thing is FOMC this week.
Okay, well then let's talk about another company that we both have love for, which is Palantir. William Blair reiterated a market performance on Palantir this morning. They said their partnership with Databricks signals an expanding AI ecosystem. Loop Capital reiterated their buy, even though they took their price target from 140 to 125. And then obviously I was at AIPCon. I got to interview tens of different customers. It looks like they signed almost 20 deals within the past 48 hours. What is your take currently on the commercial momentum versus the current valuation?
My take on the momentum has not changed. It's incredible. I don't think we've ever seen a company do this before. That is not a consumer-facing company. I mean, this company, Palantir, is not living and dying with people spending $100 or $150 with them to buy a jersey from Fanatics or earbuds or whatever product you want to think of, Nike shoes. I mean, this is a company that I've said from the beginning has the potential to be the second most important software company in the world behind Microsoft. So I'm just seeing more evidence that that can occur, which is amazing. I do not like the valuation. I still think the valuation's high. And while it has been rebounding a little bit, I think it's going to be very hard for them to get into the $100 range. I think Q1 is going to be incredibly important for them. If they don't come out swinging and really blow it out of the water, I think it's just going to kind of go sideways for a while. I don't think that we're necessarily going to see 50 or 60, but I could definitely see it consolidating between 70 and 90 until the fundamentals catch up to the valuation.
I think it's a fair take. I don't think there's anything crazy in that. I think it's very fair. Yeah, I would agree. I mean, look, a lot of the commercial partnerships that they released over the past couple of days, they're huge, and they're diverse. You know, one's a healthcare company.
Qualcomm is the one that people are sleeping on.
Yeah, and I have to go deeper into that, but Qualcomm, that's a big name. It's a very big company.
I may have an article about Qualcomm coming out tomorrow.
Very nice. We will make sure to plug that article. Speaking of articles, you put out a new one about Block that I'm linking right here in the chat. Your 30-second pitch for why Block is cheap.
It is so cheap, it's crazy. I mean, I don't have it in front of me, but if you actually go into the article and read it, I think I make a really good argument about why it's very undervalued. And if you look at what they've done to profitability, what they've done with cash from operations, and what the analysts are expecting going forward, and the potential revenue segments going forward, the buy now, pay later being integrated into Cash App, I think there's a lot of things to be excited about. This is a company that has double-digit percentage-wise EPS growth on the horizon over the next 3 years. And you're getting it for under 14 times this year's earnings. If I remember correctly, the multiples, it is very inexpensive. They have a lot of cash on hand versus debt. And it's turned the corner. It's no longer a company. While I think the stock-based compensation is crazy, it's no longer a company that is paying more in stock-based compensation than the profitability that they're generating. And in the new crypto environment, we could, with real regulation and laws, I think you could see a potential for Cash App to include other currencies other than Bitcoin. And I think there's a lot of potential for it.
Yeah, so I still disagree with this thesis. I'm going to read your article more in depth and try to get an understanding of it.
It's a numbers game. It has no, I don't use the product. I could care less about the product. But at the end of the day, the valuation doesn't make sense. This is now a broken stock, not a broken company. Whereas before I would have argued it's a broken company rather than a broken stock.
That's fair. Valuation wise, there's nothing. I mean, there's just math, right? Your analysis.
This is strictly a valuation play. This is strictly, you know what? It has gotten too cheap for the profitability that it's generating. It is buying back shares. This is a company that's still growing its revenue. I think they grew their revenue by $2.5 billion last year, and they're turning the corner. I just think a couple of good earnings reports, they're going to be back to close to $100 a share. Don't forget, this is a company that's gone down 40 or 50% in the past month or so.
Okay, speaking of buybacks, Apple 213. Do you like that or no?
Yeah, I love it.
Would you buy 213 or no?
I mean, I can't say I'd buy it because I just bought Nvidia instead of Apple. Even though I'm actually holding Apple in my hand ready to take a bite out of it, but I'm holding off because I'm honest with you. Apple is one of those companies where it does, to me, and I hate saying this, but it doesn't matter if it's 213, 226, 205. I don't care. I think it's something you just buy and hold. It's more of a technology utility at this point than anything else. And I just think it's going to gradually get bigger. Huge install base. People aren't getting rid of their iPhones or tablets. They're not going to Galaxy the same way that people are not going from Samsung to Apple. And the install base is just huge. I think that they're going to figure out their AI assistant. When you really look at what Grok is doing or what ChatGPT is doing, I'm sorry, there's no way that you don't have a real option from Apple that is not going into one of these apps that's just built into the phone within the next year or so.
Wait, hold on. You think Apple's going to make their own large language model?
I don't know what they're going to do. I don't know if they're going to piggyback off somebody else or make their own, but you can't tell me that they're not going to at least integrate something to make Siri on steroids.
Well, they already said they were going to do that, but it got delayed, which is why the analyst downgraded them.
I'm not a bear on Apple, and I haven't been. And look, I've been right the whole time on Apple. Wait,
hold on. What do you mean right?
So not from your Vision Pro, I will give you credit that looks like it's going to be a bust. But as far as Apple price point, since I've been writing articles about them, there's been a lot of people that have been very bearish about Apple, and ultimately I've been right on Apple.
I mean, yeah, so like since the past 5 years, if you've been bullish Apple, you've been right. But in terms of them actually putting up growth, I don't think anyone's been right on that because they haven't.
But they put up EPS growth, and that's what I care about.
Okay.
They don't put up revenue growth.
Yeah, they put up a lot of buyback growth. I'll give you that. That's
$100 billion a year in buybacks. I mean, but that's the thing. How does somebody get bearish on a company that's making $100 billion or $90 billion a year in profit? It's hard to be bearish on that.
No, it's very easy to be bearish on that. If they're not growing and that's the only thing they have going for them, yeah, and the valuation is trading at 40 times, like it's not hard to be bearish on that at all.
It's hard to be bearish on that when you got Costco trading where it's trading.
Yeah, I agree. Costco's overvalued, but that doesn't mean Apple's not overvalued.
But I will tell you that I think Alphabet is so cheap, it's disgusting right now.
I agree. So I think you would buy Google over Apple any day of the week.
If you didn't have the Nvidia conference coming up, I'd be buying Alphabet today, not Nvidia.
Yeah, I agree. I bought more Google last week. I want to buy more. I just honestly, the growth of YouTube to me.
You know what I meant? This is for you. I can't resist.
Oh my God! Did you just?
I just took a bite out of that.
Yeah, I could tell. You didn't have to explain it. I got it. Well, it's a nice crunchy bite. But I'm more of a banana guy. That's I'm very appealing like that. So anyway, I feel YouTube's growth, given I'm a creator on the platform and how much I'm seeing them introduce new features. I just feel like that in and of itself is my thesis on Google. Outside of all the other Waymo robotic stuff they're doing, that the market is not priced in.
How about this thesis? Companies, the last thing that goes is their advertising budget, because that's how they reach current and future customers. That's the last thing to get cut.
Yeah.
There's no better place to advertise than Meta Platforms or Alphabet, whether it is through search or YouTube. These are the biggest searched platforms. Those are the last things to go. And ChatGPT has not cannibalized search. And people need to understand that advertising is the last thing to go.
Yeah, I agree. And I think that's the same thing for Meta. Are you buying Meta here at 600 or no?
No, Meta's probably my largest position. I don't really need more of it.
And I'm assuming you're definitely not buying Tesla at 240.
No.
But so it hit 215. It bottomed out last week at 215. Do you think we revisit that?
Oh, don't say it bottomed out.
Well, at least for the week it bottomed out. Do you think we revisit that or no?
Yes. I was talking to one of my long-term buddies on my ride into the city this morning, and look, I'll tell you what I told him. I don't like discussing politics. I would rather stay away from that. But in this case, I'm willing to discuss it. And I think that Elon is potentially doing more harm to Tesla shareholders through what he is doing publicly than others think. And when you really think about it, his base was not people on the right to buy cars, arguably. And I think
But what if he's developing a new base?
We don't know if he is or he isn't. But even if he is and it's switching, I don't like it because I like the Michael Jordan approach. Everybody buys sneakers. Everybody buys cars. I just think that from a shareholder perspective, when you alienate a group of people, it's not good for business. And I am worried that is going to spill over and their auto sales are really going to diminish. I'm very worried about that. And I will blow holes in the thesis all day long. I'll debate anybody who wants to debate about autonomous. I don't care. This is not the Tesla. When full self-driving comes out, this is not going to be $1 trillion business anytime soon. You can't think stop driving because Tesla has a ride-hailing system. You have Uber and Lyft, which are ride-hailing systems, and people still buy cars to drive.
So hold on. Let me give you a counterpoint. Let me give you a counterpoint.
The entire taxi market is expected to be $430 billion in 2029. You're telling me Tesla's going to get 100% of it? I'm not buying it.
Okay, so let's say Tesla doesn't get 100%, but if everyone's getting bearish on the same thesis that Elon's hurting the brand, isn't that a lot of groupthink? And wouldn't you go the opposite direction if everyone's thinking Elon's ruining the brand?
I'd have to see numbers.
No, like literally the entire mainstream narrative is Elon's screwing the brand. Like, isn't that the time to be a little contrarian and say maybe it's not fully?
Not right now. I need to see at least 2 quarters worth of data to take a contrarian view on that because I want to see auto sales. I want to see where they're coming in. I want to see if they're going down or not, or even if they're growing. I mean, I'm worried that he is doing a lot of damage to the brand, and I just don't think that ride-hailing is the answer. I never did. I'm not changing my thesis on that until I get real data points that prove me wrong, and I'd be happy to change my stance. But people are not getting rid. You've had Uber, you've had Lyft, you've had Yellow Cab. People are not getting cars to use those services. And to think that because Tesla comes out with a ride-hailing thing, that people are just going to stop driving is crazy. People actually like driving. People actually like having their own cars.
Okay, hold on. Did you hear my story from last week?
And when autonomous comes out, people will like having their own car and not driving it, but being in their own car.
I don't think you heard my story from last week.
I did not hear your story.
I had a Lyft. I get into the Lyft.
Oh, you told me this on the phone.
The dude's Lyft app's not working, and I freaking have to give him my phone to take me to my destination. And in those 10 minutes, I cannot tell you how bored I was looking outside the window without having my phone. So the point is, a robo-taxi would never have that issue. the phone wouldn't stop working in a robotaxi because it's all based on like the amount of security and privacy and just like overall feeling
Right, but
you
that's
get.
an anomaly that happens.
No, I know it's an anomaly that the situation happens, but I think in general people would just enjoy not being stuck with a driver in the car.
Okay, but Tesla's not going to be the only one with that technology. And you could very well have Uber buy Teslas and put it on their network. All I'm saying is I don't think Tesla's going to get enough of the market share from this to really make the bullish arguments come true that some people are saying. I think the future of Tesla lives and dies with robotics.
Look, I do agree with you there. Waymo already launched in Austin, and Elon's launching in June, but we don't know how good the prices are going to be relative to Uber in June. And if it's not, like if it's only $1 cheaper, like, yeah, you're not going to get a lot of people switching. That's fair. So I think they need to prove in June that they have a successful robotaxi launch to set the precedent for the next cities they're launching in. But I guess we're gonna have to see. I agree with you as well. Auto sales, I think Q1 are gonna be really bad. There's no doubt of that. And then, as you said, it kind of comes back to Optimus or not.
It's going to live and die with Optimus. That's what's going to happen.
Yeah, but I also do think everyone's getting so bearish that, maybe there is a contrarian argument here to be more bullish Tesla. But I agree, like there's a reason for people to be bearish. It's not like it's dumbfounded bearishness. So I guess we'll find out in the coming months how.
Think about this. Everybody's bearish right now. Well, a lot of people are bearish right now. What happens if they miss Q1 earnings?
Oh, they're gonna miss Q1. There's no way they're gonna. Like, I don't see them beating Q1 or even making it. I mean, they missed last earnings too.
Think about this. What if it's a big mess? And what if guidance for Q2 isn't that great?
Yeah, that could be ugly.
What happens then? It's not like this has a lot of momentum to the upside with a lot of people being bullish, where maybe it gets a little bit of a pass and only goes down 5%. I mean, with this much momentum to the downside, this many people thinking the same thing about his political stance, and if they really do miss, and then it isn't great guidance, this could have a lot of momentum to under 200.
I don't disagree with that at all. I don't disagree. I just think that's a mainstream narrative that everyone's accepting. But yes, there could absolutely be a world where that plays out.
And in all seriousness, why take the risk and buy Tesla here when you can buy Nvidia or Alphabet? Because people aren't going in and buying 10 different stocks. They're buying one or two companies most likely. So you want to get the most bang for your buck. Nobody can give me, at least for the next year or two, a reason to buy Tesla instead of Nvidia or Alphabet. You want to make a 10-year bet? I think this is a very good time to start nibbling on Tesla and keep buying if it goes down. If you have a 10-year time horizon, I think it's an amazing opportunity.
But if it's a 2-year time horizon, Nvidia and Google,
I don't think that a 1 to 2 year time horizon is worth it. I mean,
What do you think of Mark Kelly ditching his Tesla to buy a Chevy over the weekend?
Whatever. That stuff doesn't resonate with me.
It goes to your point though that people are publicly bashing the brand and all that stuff.
Yeah, look, I would rather it not happen because it's negative publicity, and I'm not one that believes all publicity is good publicity. First it was Sheryl Crow, then it was him. I mean, it's just, this all could have been avoided. And it's funny that the breaking point was him not getting invited to the EV summit. I just feel like it's so funny that was the breaking point. But look, I'm not happy with how, as a shareholder, I'm just not happy with how things are going. I mean, look, you have serious concerns about who's running the company, what decisions are being made, where's his focus. I mean, you have serious concerns about that.
Do you think he's going to be on the earnings call?
He better be on the earnings call.
I would say 70-30. 70% he makes it, 30. I'm putting a 30% chance he doesn't.
He better be on the earnings call, and he better say something to the extent of robots are coming this year.
Well, They did say by the end of 2025, there's a shot they could start shipping them. So they said that last
You
quarter.
better say that they're fucking going to be shipped. You better say something, because I got to tell you, don't let this live and die with autos right now,
Yeah.
especially if the economy's slowing.
That's a fair point. I mean,
Atlanta Fed thinks that negative 2.4% GDP growth Q1. So don't let this live and die with auto sales in an economy that's slowing.
okay, last question for you, Steve. I don't know if you saw this headline, but Buffett is thinking of selling some of their real estate business.
Yeah, I saw it.
Any thoughts on that, or you don't care?
It doesn't matter to me.
He has been right though, right? He stayed in cash for the past 3 months, 300 billion. Like he's been right.
Okay.
I mean, being in
He went
cash
to
was good over the past 3 months.
Okay.
I'm just saying, like Buffett got it right again.
Okay. I mean,
I know you don't like him, but still.
No, it's not that I don't like him. The guy has done an amazing job. The guy is an icon, and there's not enough good things to say about him. It annoys me when people say that he's the greatest investor of all time. It really irks me.
Well, who's the GOAT if it's not Buffett?
It's definitely not Buffett.
Well, then who is it?
Forget how much money Berkshire has or how much money he has. That doesn't make him the GOAT. Percentages make GOATs.
Well, he's up like 50,000% since inception. Like,
think about how long he's been in the market, and he was investing in think about this. He bought Coca-Cola when in the 70s or the 60s and just sat on it and let the dividends compound. If you have a long time horizon like that and you got into the market at that time, of course you're going to have those types of gains. Of course. But think about it. He hasn't been in anything innovative. He hasn't called anything that nobody else called. And he has missed every tech company there is.
But does that really define if you're the GOAT or not? If you still outperform, like, I don't know.
I'm not saying the guy doesn't outperform. The guy does a great job. It just irks me when people say, well, Buffett's not invested in that. Okay, so you wouldn't have wanted to invest in Amazon? Alphabet? Any of those?
Yeah, I agree.
Really?
That argument's not the best argument. I get it.
Really? Like you didn't want to invest in Nvidia? I mean, Palantir? Even though I think the valuation's crazy. Like, he doesn't venture out of his comfort zone, and he doesn't have to. But I don't think that makes him the greatest investor of all time. I think that there are other people that are way more interesting to follow in what they're investing in because there's more upside in those types of companies.
Okay, so actual last question for you in the chat. You guys can say your answer as well. I asked this last week, but curious what people think. If he had to buy one company right now, there's one stock I have in mind, but what is the most Buffett-esque undervalued name that you think he would take a position in?
I mean, Buffett-esque undervalued. I think Buffett consolidates more insurance and buys another insurance company or energy company at this point. And it would make sense for him to buy Oxy. I don't know.
But Oxy is too easy of an answer because he's already what's a, give me a little something spicy.
Nothing spicy, but I mean, look, given what is going to happen with energy, the guy should go buy freaking Enterprise Products Partners or Energy Transfer at Kinder Morgan. He should buy a full-blown pipeline company because in 2020, he bought 7,700 miles of pipe from Dominion. He already has a very large energy infrastructure platform through Berkshire Energy. So he should just bite the bullet and just freaking buy one of these MLPs or C Corps that has 100,000 miles of pipe, terminals, storage, and everything.
I don't hate that. I think that's a great answer. My answer would be PayPal.
I mean, Visa should buy PayPal or Amex or somebody like that.
The buybacks alone, I think, has to get Buffett to be interested.
Dude, PayPal is so undervalued. It's disgusting.
Oh, Tanner did a podcast with Dan Dolev. I didn't watch the podcast, but the title is PayPal's the next.
I saw some of it. I saw the beginning of it where he was talking about PayPal.
Okay, I didn't watch it. Did he have a point about PayPal being the next Nvidia?
100%. Well, I mean, I don't know if it. Well, from his perspective of why he said it's the new Nvidia, it's because of the EPS growth going forward, and I do agree with him on that. But Nvidia has still more growth on the horizon, but PayPal is so hated right now. I think he's absolutely right, and it's the same thing that I've been saying about PayPal for a while. And I mean, PayPal's another one that's massively undervalued.
Yeah, I would agree. I think there's other opportunities, but
one.
100% agree.
Massive one. So,
all right, good stuff. Thank you, Steve.
I'm going to finish my apple. Now we're going to go to some meetings, and then I'll talk to you later.
All right, Steve's Twitter right there in the chat. His Seeking Alpha is on his Twitter. You guys can check him out there. I'll talk to you later, Steve.
And leave comments on the Black article, and I'll respond.
Yep, you guys can comment on the Block article, and Steve will respond to all of them.
All right, later.
Later. Have a good one. Okay, cool. So as per the 1030 slam, we are red, baby, because why wouldn't we be red? Qs are barely holding on to some green. Actually, no, S&P's green. What am I talking about? Well, the individual stocks are still red. Again, look, tech is red. Nvidia goes down 1.4. Tesla's down almost 5. S&P is holding up. Consumer and utilities are holding the index up, even with the rest of the market in terms of growth. Yeah, Walmart up 2%. That'll help the S&P. Costco's up. That'll help the S&P. Target's up. That'll help the S&P. Home Depot's up. But SMCI, Tesla, Google, Palantir, they're all red on the day. Yeah, the Max 7's dragging the Qs right now as well. It seems like the same story, right? Every time around this part of the day. This is also what happened on Friday, but then we ripped a little bit later in the day. So we have to see if that continues. We have the head of IBKR on CNBC right now. Let's get some thoughts from him. Margin was at an all-time high a couple months ago. Let's see how he's talking about clients and their trading behaviors.
Downward motion of late. Thomas Petterfees, Interactive Brokers founder and chairman. He joins us now to weigh in. Tom, Mr. Petterfees, I like to call you. What are you seeing out there right now in terms of
Tomas?
Tomas, yeah, there you go. That's better.
Yeah.
Tomas, what is driving, in your opinion, right now, sort of sentiment amongst the investor base, certainly that uses your platform, for example?
Well, the issue is that just not quite a month ago, our customers were up over 6% for the year, and today they are down 2% for the year. So that's quite a turnaround. And obviously, I think it is caused not as much by the tariff storm, but simply stocks have just gone too high. The P's were almost to 30. Now they are back to 28. I think they could come down a little bit more. And also, our customers were basically very heavy in Nvidia and Tesla, which were the two highest holdings, followed by Apple, Microsoft, Amazon, Meta, Google. So these are the...
And no Palantir. Palantir is a top 10 holding on Robinhood. It seems like it's not for IBKR.
The big tech stocks. On the other hand, I think that what we're getting out of artificial intelligence is just absolutely amazing. It is getting very substantially better every month. So if you are using AI, you can see that very, very rapid improvement in that. And so that's quite breathtaking.
Actually, since you raised it, I'm curious. I assume you are using it in your business. That's firsthand that you're sharing that. Give us some sense as to how you're using it and what you're referring to when you see these sort of gains that you're talking about.
Well, just any area you want to explore. You start a conversation, and suddenly you're talking to an entity that knows a lot more about anything than you do. It's just quite amazing to me. It is just breathtaking. So if anybody out there is not using it, I think you're missing out.
Do you think it's going to change the way that people invest and the edge that retail traders can have over institutional?
Absolutely. You discover connections that you haven't thought of before. So it's just, I'm just completely amazed by it.
Chamath, a couple of months ago, I think you were flagging that margin borrowing among your customers was at a record. Now, the stock market value was also at an all-time record. So I don't know if that felt like it was excessive to you, but where does that stand right now, and where does it appear we are in this sort of reduction in risk process?
So we had at the high point we had 66 billion in margins. And that was about a month ago, and now it's down 6 to 63. So it's a 5% drop. It's not really a lot.
So Robinhood went from 8.3 to 8.7 billion. So Robinhood actually went up by 400 million in the past month. We'll see what March numbers looks like, but that's what we had for February. IBKR, obviously a much larger brokerage, had 66 to 63 billion. So people are still taking out a decent chunk of margin, which I think is a pretty good indicator on how risk on the market wants to be. Obviously, that margin has reduced by 5%. I think that's not too crazy in the past month. Now, if that margin came down from 63 billion to like 40 billion, you would see a lot of money just getting taken off the table, as people would be much more scared to borrow capital. But that's not exactly what's happening yet. I guess at the end of March, we'll get updates on those margin numbers, but 3 to 4% decline isn't that crazy. Tesla right here still down 4%. S&P is up. Q's just went green a little bit. And Google as well, still down on the day. Celsius is up 7%. That is correct. I continue to be amazed by this one, but Celsius up 7% right here and getting some momentum. It also got a ton of momentum last week, and then it got hit for a couple of days, and now it's back. But in terms of margin bounces slowing down, I don't think there's a meaningful enough slowdown to draw any real conclusions. The 10-year is back under 4.3, which is nice to see. We're at 4.287, which is good. But yeah, Trump wants that at 3.5. So that needs to come down a little bit more. This headline I shared when I was on the phone with Steve. Tesla's launching a free trial of FSD in China from March 17th to April 16th. That seems relatively good. That means that FSD is getting ready, hopefully, to start being marketed in a much more efficient way in China. I think Tesla has a lot more competition in China than the United States when it comes to self-driving. But if it really is that good, then consumers should be able to pick Tesla. There have been a bunch of videos that came out over the weekend of the new Model Y engaging in FSD in China, in the Chinese roads, and they've been pretty good. I mean, it's actually been able to hold up against all the different random things that pop up on the road. So I guess we're going to see how much they can expand that going into the coming months. Yeah, BYD is going to be competition as well when it comes to being able to deal with self-driving. And part of that is because a lot of these Chinese companies have, to an extent, just copied a lot of what Tesla is doing with FSD. Now, a lot of them don't have the proprietary data that Tesla has, and that's the difference. But we have to see how much of a difference it actually has in China. Delta still down 1%. Nvidia going from green to red. I do think buying Nvidia just for GTC, I don't know if that's the best strategy. I mean, because Jensen could say something, and then after a couple of days, the stock could go back to trading the way it is. So maybe if you're trading it before GTC, there's a little bit of a pump you get if Jensen says anything good. It could also just be a sell the news. If he doesn't say anything about Rubin or Blackwell, that's that interesting. We should get a somewhat of an update around Blackwell ramp up. TSM's February monthly revenue growth of 43% year over year was incredible. And I think that gives us a little bit more of an indication on how well Blackwell's going. Affirm down 12%, but seeing Jensen say something about it would also be very encouraging to the broader market. I mean, what do you think about Databricks and Anduril if they IPO? I don't think Anduril is going to IPO this year. I think Databricks has a shot to IPO. I think the Databricks IPO is going to be expensive. I think they're going to IPO close to $80 billion. Previous valuation was 62. They might even go for a $100 billion IPO. Looking at Palantir's market cap, they might say, all right, so we're growing faster than Palantir, which they are. We can be worth half as much as Palantir. So I think Databricks is going to be an expensive IPO, and I would not be that interested unless like the valuation is somewhat reasonable on that. Anduril, I'm interested, but I don't think they're going to IPO this year. I think they have enough money. They just raised a new round of funding, so they can really take their time to do what they want to do. Speaking of private startups, Figure did show off a new video over the weekend, and that video is their new BotQ manufacturing facility. So this is what it looks like right here. And essentially, this is a new facility in their or this is a new manufacturing facility in their new headquarters, which is going to be manufacturing the Figure 3, which is their newest robot. And they say they can manufacture up to 12,000 on the line, and they're trying to get this to 100,000 at a time, which would obviously be really good. I think this was important for Figure to release, number one, because a lot of people have been doubting that they have the manufacturing scale to be able to compete on a global level. The demand is obviously massive. And so the question is, can you fulfill that demand? And if you have supply chain bottlenecks in order to make the demand fulfillable, then it's like, well, can you actually get at this scale? And it looks like, at least in this video, they're starting to show that, you know, they have the manufacturing chops to be able to do it. Now, look, Tesla's still the clear winner. Obviously, Tesla has built millions of cars for the past decade, so they know how to do this. And I don't think it's going to be that different doing this with a robot, especially because a robot is much easier to build than a car. But for Figure to be number 2 in this race, they've got to be able to manufacture effectively. And this video kind of showed a little bit of how they're planning to get there. So we're going to see how they can do it. Again, 12,000 is their goal. They want to get to 100,000, but right now they're saying they can do 12,000, which is good. I mean, if you can even ship a couple thousand robots this year, I think the market would be very, very excited. Here's another clip from the weekend that I thought was really interesting from the All In podcast. So the All In pod talked about the recent market volatility. They had Chamath, who was on, or Andrew Scholes, who is a comedian who was on the podcast, is actually one of my favorite comedians. And here's an interesting take that they've had about how no one should really care that much about the stock market.
Every American thinks they're going to be a millionaire. That's what this country drives off of.
That hope, yeah.
And the second they stop thinking they will be,
or they can be,
it falls apart. I'm telling you, like, the you guys of the world need to pay close attention to it, because there's going to be no empathy if anything bad happens. Oh, the stock market is down. No Americans are invested in the stock market. Like, that's all you guys.
Half of the country is. I've been saying it for months. Nobody cares about the stock market, nor should we. And the reason is because we, people who own these assets, have overly benefited more than we've deserved for the last 15 years. Ever since the great financial crisis in the United States, people who, as Jason said, could cozy up. If you could have lobbied Obama in those critical years of the GFC. Yep. Oh my God. We took interest rates literally to zero. Anybody like us who could have gone and gotten levered up and gone into the stock market was richly rewarded. And the problem is we left everybody else behind. And I think the great thing about Trump is he is going to reset that. He is going to take a lot of wealth away from asset holders. There is no sympathy. I think it's fantastic.
It's great to hear you even saying that, because I feel like a lot of people that are in maybe your guys' position don't understand that disconnect.
Okay, so I think there's some nuance to this. Number one, Schultz is wrong about no one being invested in the stock market. I mean, half of America is at 401ks. Even if you're not literally buying stocks on Schwab or Fidelity, you have a stake in America, right? So he's wrong about that. If we get a 50% drawdown in the markets, that's going to hurt everybody, not just people that care about every single tick on the candlesticks going up or down. So that's the first thing. Number two, I think the broader point he's trying to make is that Americans, the majority of Americans, which he's right about, aren't actively caring about what Jerome Powell is going to say on Wednesday. There's a certain set few of us, I would say, out of a population of 150 million adults, let's say 10 million of us, maybe 15 million, maybe give us 10% that actually care about what Jerome Powell says, which is a very, maybe I'm being too aggressive there, but I think that's a small portion of the people that care. So Chamath's hypothesis takes it a step further, which is that this whole thesis that Trump's going to tank the economy to make interest rates come down. He thinks not only is Trump going to tank the economy, Trump's going to take away all the benefits that asset holders have achieved, because we've overly benefited in the past 15 years after the great financial crisis, and that's going to be a hard reset. I don't know if I actually agree with that. I think there's an argument that we're going to have some volatility, some pain. I agree with Besant about having this detox, but I don't think Trump's going to get house prices to fall by 50% or Nvidia to fall by 50%. And if he does do that, I don't think that's going to be viewed as good. Now, will that create an amazing buying opportunity if earnings growth doesn't slow down as well? Because that's the nuance, right? Like if those stocks fall by 50%, but their earnings are up, yeah, it's a great buying opportunity. If their earnings collapse, then like it's not a good opportunity. Will it create a great buying opportunity? Yes. But the question is, who's going to take advantage of that? And quite frankly, the irony of what Chamath is saying is the only people that are going to take advantage of that are people that are rich already. Like if the average American doesn't care about the stock market right now, if Nvidia falls 50%, my assumption is they're going to look at Nvidia as like a roulette in a casino. And they're going to be like, yep, that's why I stay away from the stock market, because something as big as Nvidia can fall 50% and people can lose trillions of dollars. When in reality, there's only going to be people that actually understand the dynamics of Nvidia and why the market opportunity is so amazing, or hedge funds, market makers, et cetera. They're going to step in and they're going to buy. So if you've got the richest people in the world that even have the dry powder to buy these assets, I don't think that gives credence to the point that taking away assets from people that currently have them right now in order to create an opportunity for Main Street, as Chamath says, to get exposure. I don't think Main Street's going to get exposure. It's going to be hard for Main Street to meaningfully have even the capital get there. Because if the stock market falls as much as Chamath's going to say, 50%, I mean, Main Street is not that disconnected from Wall Street. Like, because if Facebook falls 50% in terms of its stock, again, my thesis is a lot of companies are not going to be advertising on Facebook. Facebook's going to have to make a lot of decisions with layoffs. Those companies, the mom and pop pizzeria that's trying out Facebook ads for the first time, they're going to have to cut some employees because they can't afford the Facebook ads. Like, there's going to be a lot of shit for everybody. And that's not going to be the best thing for people that have assets and for people that don't have assets. So I don't know if this thesis of just taking away assets from people for Main Street makes a lot of sense. Now, one thing Chamath did say that I did agree with was the last thing on the pod about how to handle the volatility of the red. I thought this take actually was really good.
Brutal. There are moments where you just wake up and it looks like everything's working. And then there are moments, and this is what everybody needs to understand, though, if some of these programs work, where it literally looks like the bottom is falling out. And I cannot describe to people the pressure you will feel on behalf of you and your family when it looks like you're taking a 30 or 40 or 50% negative downturn to your net worth.
Yeah.
It inflicts a level of psychological damage that I cannot describe to you. And the bigger the numbers get, and by the way, I told this story on Tucker. There was a period where I would wake up and I could just tweet and the markets would go up. They were like, what's he going to say next? And then it all...
For those that are wondering what he means by that, in 2021, and I think a lot of you guys know, but for those that don't know, Chamath was sponsoring a lot of SPACs, and he was known as the SPAC king. And so he would go on CNBC or he would tweet what seemed like pretty much at least every month, if not every week. Oh, he had a new SPAC. I think he had in total, I don't know, 10 of them, something like that. And he would say, hey, Open Door, I like Open Door because blah, 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 blah. Or SoFi, I like SoFi because blah, 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 blah. All these SPACs went to shit. SoFi is the only one that's really standing and that has anything to say for it. But the rest of this, Virgin Galactic, all of these things went to shit. And so he made a lot of money in sponsoring the SPACs. He was basically the broker that brought all the capital, and then he got paid a fee from the company going de-SPACing, aka going public. But he had a lot of equity in those SPACs, and that equity went to shit. And so he lost a lot of that money, even more than what he brought in. And because there was a lot of retail buying those SPACs, his reputation took a pretty big hit.
Stopped. And then there was a 2.5-year period where I gave it all back and then some.
That's frustrating. The Midas touch goes away. Oof.
It's beyond frustrating. It shakes you to your core. So if we do these programs, I think the Friedberg idea is just beautiful. It's lovely.
What about you, Schultz? When did you make it?
But just to finish, if we do it, we have to try to teach people how to deal with the drawdowns, because that's where if you don't teach them how to deal with the volatility of losing money, it's great when everything's green. But those red days, man, how you comport yourself, how you act, how you treat other people in the red days are the only days that matter.
Now, look, I agree with the words coming out of his mouth. Obviously, the person uttering those words is quite questionable. Look, you guys know my thesis on selling stuff and scamming an audience and stuff like that. You guys know how I feel about all these people with these stupid Discord courses. Pay me $99 a month and I'll tell you exactly when to buy a stock. Like, I think it's all full of shit. Chamath took that thesis to the next level by presenting Open Door and SoFi and Virgin Galactic, all these companies that in 2021 were pure phenomena of a ZIRP environment, zero interest rate environment. And he got retail to buy them. And because of that money coming in on retail, CNBC did their part by helping pump him every day. That is what created a lot of bag holders in those names. It was funny. I told you guys the story. My grandpa, the one who trades options, he lost like 200 grand buying these stupid SPACs that Chamath was mentioning. It was back in 2021. And it was funny because Chamath's not Indian, but he looks Indian. And so my grandpa saw an Indian on CNBC saying, hey, you should buy Open Door. And he was like, okay, this Indian guy says, I'm going to buy Open Door. You know, it's just like, okay, he's Indian, I'm Indian. He should be smart. I'm smart. And obviously that's not how it worked out. And so he definitely is not a fan of Chamath. But the point is, a lot of people have engaged in this type of egregious promoting of companies and to the most vulnerable, to retail populations. And I think Chamath has really put a significant part of his brand in damage because of that. Because now every time he says anything that might have any level of credibility, just as like a normal take about the markets, he gets hit with, you scammed millions of people. And rightfully so, because if you scam millions of people, you probably should have to deal with the backlash of it. But his overall argument about being able to deal with the volatility, given he went through the experience of raising money and then losing a ton of money, I think is important. And I think on the red days, how you treat people is also a really important a way of navigating it. Because if you treat people like shit, if you're a jerk, if you curse people out on the red days, like, you probably don't deserve the green days. And being able to compose yourself in a way that is still reasonable, even when you're losing a ton of money, I think that matters. So, yeah, that's essentially the take that he had on the pod. I thought it was a decent pod. I didn't hate the pod. I like Andrew Schulz. He's one of my favorite comedians. I know a lot of people are like, why is Andrew Schulz on a business podcast? But yeah, I thought it wasn't a horrible podcast, and they went through some decent analysis about why it's important to invest in the broader markets. Schulz is 41. He didn't buy his first stock till 35. So from his perspective, he's just like, the stock market never mattered. But now he's starting to feel that compound interest and all that stuff does matter. Yeah, Chamath is Sri Lankan. He's not necessarily Indian. Okay, we got some new updates on Trump's polling data. Let's take a look at that, and then we'll keep going.
Donald Trump sports his highest approval rating overall, but his economic approval has taken a hit. The latest NBC poll showing the president his approval rating at 47%. That's up 4 points from when he left office in 21. 51% disapprove of the job he's doing, down 4 points. Pollsters point out these numbers are relatively weak for a president in the first months of office. By contrast, the president's economic approval sank to 44%. That compares to 55% in 2020. Disapproval up to 54 from 41. So the president starts his term substantially underwater on the economy, but well ahead of most of President Biden's numbers. More Americans in this poll rate the economy as just fair or poor than they did in our CNBC poll in December. By contrast, 44% say the country is on the right track, and that is up 17 points from the November NBC poll. Public net negative on President Trump's efforts to reduce prices. 43% satisfied he's doing enough to deal with inflation. 55% unsatisfied. The president's immigration policies, however, getting strong support. Respondents disapprove of Doge by a 41 to 47 margin, and of Elon Musk by a bigger spread of 39 to 51. On tariffs, results were mixed. 41% saying the president's tariff policies are bringing the right change. 38% say the wrong kind of change. And 18%, probably more in the opposition side there, see no change. 49% of respondents think CEOs, we talk about this a bunch, think CEOs of large corporations are too supportive of President Trump. 12% say too critical. And the positive image of Democrats dropping to an all-time low of just 27%.
Wow. So the Dems have now a 27% approval rating, and Trump's basically at around 50%, which is higher than when he left office. Tesla down 5.29% right now. I think the biggest takeaway from that is where the Democratic Party stands at right now, because although people want to complain about Trump and, the tariffs and Elon Musk, et cetera, I don't know who's the new leader for the Democratic Party that's going to step up and take advantage of some of that, pain that people are feeling with Trump. And, there's some people saying it'll be Newsom. Other people are saying it's going to be AOC. I definitely don't think there's a defined 2028 candidate right now. But I think pretty soon we're going to find, within the next 6 months, we're going to know who the Democrats are going to have for 2028. And they will probably start marketing as soon as the midterms come in. Which is good. This is another thing Chris has been saying. It's like, is the market going to be shit by midterms? Because if it is, you got a lot of people. Robinhood, by the way, up 3%. Hoodie, not doing too bad on the day. You got a lot of people that might just say, you know what? As much as I loved Trump a year ago, I don't care anymore. I want the markets to come back. I'm voting for the Dems. You might have people that just hate their portfolios and say they want to vote for something else. So I don't know, dude. It's going to be really interesting to see where the markets are in relationship to the economy. Also, will people agree that we need short-term pain for long-term gain? You got some people that are massive Trump supporters that are kind of okay with the stock market taking a crap because they believe in like the health of America. And in order for America to be healthy, you have to cut back all this government spending. And so they might be willing to sit on some losses. But I wonder if the average Trump supporter that cares about the market also cares about fixing the glut inside of the economy. I don't know, dude. It's gonna be really. It's hard to even have a prediction by the end of the year. Like, oh, I got to show you guys this chart. I didn't show you guys this on Friday, but also I got to show you guys this. So we showed the figure video. Optimus had some new videos or photos with Kim Kardashian. My take on this is I'm just like not that impressed, dude. Like we've seen this happen over and over again. I want to see Optimus actually doing something like important. I don't want to see it posing with Kim Kardashian. So, I mean, like, is it a cool photo op? Sure. Is it really helping Tesla's Optimus story? No, I don't think any sell-side analyst is looking at this and being like, oh, Optimus, it's with Kim Kardashian. We need to take it more seriously. So I'm waiting for Tesla to actually show us Optimus doing something like important, because for the past couple months, they really haven't, outside of changing some batteries in the factory. But yeah, I mean, if you care about Kim Kardashian, then you have that form of marketing. Okay, so here's the next thing. I didn't show this on Friday, but take a look at this. I know it's some hopium here, but this is the every post-election year aggregated S&P 500 in blue, 1950 to 2021. And then you have the S&P 500 through February 28th. I know it's March 17th, but basically in March, you go even lower, which right now we have that red spike in the end of February. We basically completed that lowering of March last week when we hit 5,400 or 5,490 on the S&P. So almost exactly the red line is lining up with the blue line. And in April, the blue line goes up. In May, it goes up. In June, it goes up. In July, it tops out. In August, it takes a breather. September, it goes up. October takes a breather. And then we Santa Claus rally through the end of the year. And again, this is not just against the S&P 500. This is against 71 years of aggregated S&P 500 data specifically for years after the presidential election, which is what we just had in 2024. So 2025 is an election year. If it really is this simple, like if this chart really is the way it's going to play out, it would be hilarious, because it would just be a historical trend and seasonality for some of the volatility that we encompassed. And you know, it's not like it doesn't make sense, because after the new president gets elected, you get a bunch of momentum in the stock market because like everyone's excited about all these new policies, and that tops out, which it did in February. January, we got excited. February topped out, takes a breather, have a bit of a correction, have some stagnation in the markets, let things cool down. And then earnings growth gets back to normal. And then we keep going further and we get some more dips along the way, but we end up about 10% higher towards the end of the year. Now, the only difference is we didn't have a president in any of those years that threatened tariffs every other day on Twitter. 2018 was not a post-election year. It was 2 years after the election when Trump was doing the same tariff volatility stuff back then. So that's the only nuance to this chart, is like we never had Trump dictating policy the way he's doing right now. JP Morgan just went green, but if it is that simple, then it wouldn't be the worst thing in the world. It could be a placebo effect as well. It could be like me getting drunk off mocktails. So it could be that, but maybe it is seasonality. Who knows? Luminar is up 25% today on the Mark Rober video. Okay, Luminar, I didn't even know these guys were public. Lazar, LAZR ticker symbol. So hold on, they gained 23%, which means they gained $46 million in market cap today, based on the video. It has to be the video, right? There's no other reason it would be up, by Mark Rober. How much did they pay Mark Rober? Because even if they paid him $2 million to do the video, and they just increased their market cap by 46 million, that is a 20x ROI on whatever they paid Mark Rober to make that video. And Mark Rober's video, again, I didn't watch it, but the video has, wow, 10 million views. Holy, 10.4 million views. I wonder how much he got paid, bro. I really wonder how much he got paid. Look at that. 10.4 million. Can you fool a self-driving car? Well, whatever they paid for it, it was worth it. That's facts. Whatever they paid for it. That's, you know, it reminds me when Spotify gave Joe Rogan the $100 million deal. And this was back in 2021, so everything was going crazy. But their stock was up, I think, $10 billion in market cap the next day. 100 million for 10 billion, not bad. Not bad at all. So, yeah, it looks like Rober made some money and Lazar made some money. $203 million market cap today, up 20%. And maybe that's why Tesla's down 6%, because there's no other headline. But again, from your guys' comments, that video seems to be pretty egregious. Doug says, can I, as a shareholder with 9 shares, sue Lazar and Rober in the state of Delaware? That would be funny if someone actually sues them and they only have 10 shares. Because that's what happened to Tesla. That is what happened to Tesla. You know, the Delaware, what was that guy who was on CNBC the other day? The Delaware head of business or something? Head of the Commerce chamber. They asked him, what do you think about Elon leaving? And he was just like, I don't care, or something. Yeah, there's this video right here. It's the governor of Delaware. Sorry, the governor of Delaware. This is what they asked him about companies leaving Delaware, and here's what he said.
If Elon's watching right now, what would you tell him?
Elon who?
Musk.
Elon Musk?
Yeah.
Please stop cutting our federal government with a chainsaw. Please preserve Medicaid.
He meant about his shares.
He's not coming back to Delaware with that.
The shares, yeah. Elon, yeah, he's running his company. I don't know.
Right.
I don't have much to say to him on it.
If Elon.
Dude, people hate Elon so much, bro. Oh my gosh. I feel like he should care because Tesla left Delaware and a lot of other companies are getting ready to leave Delaware. I feel like that matters, right? Like Delaware thrives off being the one state where most C Corps incorporate at. Maybe that's not going to be the case for the future. Archer's up 5%. Kohler's up 21%. Nvidia is down 2%. AMD is going opposite of Nvidia, which is interesting. That usually doesn't happen. AMD is up 4. Nvidia is down 2. And the S&P is still holding on to about 0.2%. I don't think I've ever seen people this polarized on Elon, bro. I feel like in 2025, it's legit 50% hate him, 50% love him. And I don't think it's been this 50-50 in a long time. But people are absolutely either fed up with him or they love what he's doing with Doge. And it's one or the other. It is even in New Jersey, bro, where I live. I think I saw this a couple of days ago. I think it was on Friday, but near a Tesla store, you had a bunch of people protesting. And I have yet to see this in New Jersey happen, but I've seen a lot of it in New York. But now it's happening in Jersey as well. I'm like, all right, I guess. Like, bro, I went to charge my my car yesterday, and I went to the supercharging station, and the bottom of the supercharger was like open, and for a second it felt like, did someone just like crack it or something, or is that like a natural, like it was really windy over the past couple of days in Jersey? Maybe that's what happened. And so I'm assuming it's windy because they didn't spray paint it or anything like that. The charger was still working, all that stuff. But it made me think for a second, like, yo, what's going on here? What's going on? And I was kind of afraid to leave my Tesla alone and just like take a walk for a bit because I was like, I don't know. Am I going to come back and there's a freaking Nazi symbol on the car? Like, it's getting kind of ridiculous at this point. Yeah, there were protests in Boston, plenty of protests in New York. It is pretty aggressive. Aaron says, my fiance works in DC. Her bosses are getting laid off left and right, but she still has her job because she works hard. So I am all for Doge. Yeah, I think the next unemployment report is going to be really interesting. I think we're going to see a lot more federal employees laid off. We are already seeing housing prices start to go down and housing vacancies go up in DC because people are moving out. And you got a lot of federal workers that are probably selling their homes and just getting out of DC. So I think it's definitely changing based on all these cuts we're going to get. The question is how many of those cuts are we going to see? And that's what Trump was talking about, right? Which is that he likes the private part of the markets revitalizing to bring a lot more labor versus the public markets or versus the public sector. But how much of an impact is it going to have on unemployment? And then what does that mean for rate cuts at the end of the day? Speaking of Tesla, here's a take from CNN talking about Tesla in regards to its politicization. Let's take a look at this.
Not because I'm progressive, hardly. I'm a Tesla owner. 2 of them, actually. Not because I'm progressive, hardly, but because I appreciate the technology. And I'd rather not contribute to global warming. And I like that it's made in America. In fact, among all automakers, Tesla is arguably the most American, at least for vehicles sold in the U.S. A Cars.com study ranked my car, Tesla's Model Y, as the most American-made vehicle for the 3rd year in a row, with the Model X and Model S also making the top 10. While Tesla does manufacture some cars in China and Germany for global markets, every Tesla sold in the U.S. is built in California or Texas. That ought to appeal to Republicans, at least the Texas part. Compare that to Ford, GM, or Stellantis, which produce many of their vehicles, including some of their best-selling trucks outside the U.S. So while some buyers see a Ram 1500 or a Chevy Silverado as the ultimate American ride, their vehicle may have been assembled in Mexico with parts from all over the world. My Teslas rolled off the assembly line in Fremont, California. When I discussed all of this week on my SiriusXM radio program, I got a telephone call from a guy named Jerry.
I'm a California liberal. I'm a Tesla owner for almost 10 years now. It's the most American-made car you can possibly buy. The person in charge of Tesla is Elon. He is absolutely crazy. They should not allow him to talk to people, but he builds a great car. What are the alternatives? Volvo is owned by Chinese. Japanese and German cars have a bad political history. You don't buy a Tesla, you're really hurting people who assemble cars in California, where I live. If I remember correctly, Henry Ford had a picture of Adolf Hitler on his desk till about 1940.
I think he reversed that last part. We fact-checked the caller's claim about Henry Ford and discovered Adolf Hitler admired Ford's anti-Semitic views and kept a photo of the automaker behind his desk. I don't make my consumer decisions based on politics. I make them based on quality. If politics factored into my buying habits, I'd no longer be listening to the music of Roger Waters based on what happened in that interview we did. Nor would I have rooted for Carla Sofia Gascon, star of Amelia Perez, to win an Oscar despite her controversial social media posts. I think she deserved it. And when it comes to Musk and Trump, I have another agenda in hoping they broaden Tesla's appeal. Chargers, there still aren't enough. You remember when we were promised that the infrastructure bill was going to change all that? Nearly $5 billion was appropriated for EV charging stations back in 2022, but as of July of 2024, only 8 states have opened their first stations with just 61 ports in total. So maybe Musk and Trump's newfound marketing will boost charging availability, which will be good for all of us and for the planet. How ironic and progressive that it would then be Trump who is reducing carbon emissions. But whether it's Trump or Musk or Biden, I don't care who gets us there. Just plug me in and let's roll.
You know, there is an argument. It's a very, very hard, nuanced philosophical argument. But like, for my music fans in the chat, are you not listening to Kanye West anymore? Because Kanye has said some pretty questionable shit over the past, let's call it over the past couple of years, but definitely over the past couple of days. I mean, it's tough, right? Like, do you just completely let go of an artist simply because of their political views, even if their music resonates with you? And I think same thing with Elon right here. Like, a lot of people just think the car is amazing, like myself. I mean, I could give 2 shits about Elon's politics, dude. Like, I haven't drove the Tesla for a week because I was at AIPCon. Yesterday, I had a 40-minute drive, and it just, like, I love it. Baba's up 4%, by the way. I love driving my Tesla, or I love that it drives me every day. Like, I enjoy being in that car, and I don't care what the hell Elon believes in. So the question is, how many people are there that truly just value the product over the political association of the founder of the product, versus how many people actually care about the fact that they don't like that Elon's working with Trump and they hate Trump so much. And I think that is going to give us a ton of, or we're going to get a ton of data in Q1 to see what auto sales looks like. I also wonder how Tesla's going to deal with I'm sure the analysts are going to ask about the brand and the political stuff. And I wonder what Elon's response is going to be. I think Elon is probably just going to be like, screw you. I think he's going to say the same thing he said on other earnings calls, which is just like, if people don't like it, they don't have to buy it. And because I don't think Elon cares about the stock short term, even though obviously everyone looks at the stock short term. But I think Elon's literally going to be like, if they don't want to support Tesla, they can screw off. I'm going to keep doing what I'm doing. And it is what it is. And either the market's going to like that approach or not. We'll see after Q1. But I don't know, dude. I, for one, I'm not the type of guy to protest something because of the political beliefs of the person making it. Robinhood's at 41. Okay, there we go. Hoodie, 40.96. Not bad. Hood having a nice green day, even with some of the red we're seeing. Like, I don't know. Do you guys not listen to Kanye West because of what he's been saying, right? Like, do you not listen to Michael Jackson because of the acquisitions? I mean, or accusations? Like, it's so hard to tie your ability to take actions or buy products based on purely the political association of something. And some people might want to do that. But other people, I don't think they should be seen as horrible people if they choose not to do that. You know? So it's going to be a reckoning moment in this country to see how much Tesla really is affected by how people care or they don't care. Hood will hold your funds for 5 years hostage if you transfer. Yes, that is correct. If you do the 2% match on Hood, you will have to be there for at least 5 years. Robinhood back above 41. So if you don't want to be on Hood for 5 years, then don't transfer. But if you do transfer for that 2%, you have to be there for 5 years. But the good thing is you get the 2% immediately. That's the good thing. And that's why it's important. What I respect about Elon is that he moves forward and does whatever he believes. Yeah, I agree as well. I mean, that's the thing about Karp too, right? Like there's people that disagree with Karp's political takes, but it's like he has the balls to like give his take and the backbone to stand by his take. And you can either disagree or agree with it, but I still value the fact that someone's willing to even say it at the detriment of their own company, which is also what's happening with Elon. Tesla is the best car ever, politics aside. I agree with that as well, dude. Granted, I'm not a big car guy, so you have to take my opinion with a grain of salt, but from going from a Honda Civic to a Model Y, it's night and day, bro. Rivian's up 1% as well, by the way. Absolutely night and day. S&P still holding 0.4. Robinhood's up 4.5. S&P 0.4 is holding. Let's see if we can keep that up. 0.4 for the day would not be bad. Anne Marie says, if people are scared because of cutting out fraud and waste from the government, it just makes our government more efficient. That tells you everything you need to know about the person. Yeah, look, I think people are upset with how Elon's engaging in Doge, but I don't think people are necessarily upset that he is engaging in Doge. It's like the process by which he's cutting, not that he's cutting itself. There are some people that are probably upset that he's cutting. Those people to me are out of their minds because we have a deficit of over $2 trillion and we need to resolve that. But it begs the question, can someone effectively cut fraud and waste from the government in a nice way? I don't think that's the case, dude. It's always going to be ugly. Like, so for everyone who hates how ruthless Elon has been with this, like, I feel like you have to be ruthless because there's no easy way to cut waste and spending. It is always going to be aggressive. And as a result, I think we need to engage with it. In fact, this was a clip that we found from, or Elon found from 2011 of Obama also saying, hey, we need to start cutting fraud and waste.
Everyone knows that getting rid of the deficit will require some tough decisions. And that includes cutting back on billions of dollars in programs that a lot of people care about. But what should be easy is getting rid of the pointless waste and stupid spending that doesn't benefit anybody. Waste we should be getting rid of, even if we didn't have a deficit. Sure, some of these cuts aren't that big, but no amount of waste is acceptable. Not when it's your money. Not at a time when so many Americans are already cutting back. Just as families are living within their means, government should too. Did you know the federal government pays for a website devoted to a folk music ensemble made up of forest rangers? They're called the Fiddlin' Foresters.
Okay, no music. Hold on.
Their music on my iPod, but I'm not paying for their website. And there are hundreds of similar sites that we should consolidate or just get rid of.
Doesn't this sound so similar to what Elon's been saying about the stupid shit we pay for right now? Like, this is 2011. Obama's talking about a music website the government paid for. I mean, there's very similar things Elon has pointed out about, like, why do we pay for this stuff?
By the way, you're not only paying for websites no one needs, you're paying for thousands of buildings all across the country no one uses.
This is also what Elon has been saying, right? Like, it's hard to deny that there are lots of government buildings that no one walks into every day, but that we pay for leases for.
For the last decade, the government's owned a massive and completely empty warehouse in the middle of Brooklyn, for example. Now, the government hadn't been able to sell this building and others like it because of red tape and Washington politics that held things up for years. But we're finally cutting through all that and plan to get rid of these buildings in the months ahead. We need to step up our game. We need to go after every dime. We need to make government work for you. That's why, starting today, I've asked the Vice President to lead a renewed effort to hunt down misspent tax dollars in every agency and department of this government. We're calling it the Campaign to Cut Waste.
Okay, so Obama had the campaign to cut waste in 2011. Obviously, it didn't work at all. And even if they cut a little bit of waste, they spent enough money for that waste to not having any meaningful reduction. It sounds very similar to what Elon is doing as well. This is not fake. That is not AI. That is not AI. I'll put the clip right here. This is a real clip. So the fact that, like, this happened in 2011, I mean, it doesn't sound that different from what Elon's saying. It sounds pretty much exactly like what Elon's saying. It's just this one didn't actually play out because in 2011, we had no real, I guess you could call it, third-party agency like Doge that was ruthless about the cutting. And so, look, I'm not saying Trump's going to be successful at it because I know we got tax cuts. I know we can't afford to, but like, I get it. And I think we have to give him the next year to see if there's any progress on the deficit. But the point is they're trying. And I don't know why anyone hates the fact that they're trying. And you might hate Elon personally, you might hate Trump personally, but Doge as a concept, I don't know how you can be against that. Because if we don't deal with this deficit, there's not going to be a stock market. Like, we are going to be so into debt that it's not going to matter at some point. And the only people it's going to hurt is our children's children's children that are going to be left in the next 50 years trying to figure out how to deal with this shit. And I don't know. I feel like this is the right time to at least try, even if it's not going to be successful. So we're going to have to see. We're going to have to see if it ends up playing out. Now, a lot of people also think that they're going to be attacking Social Security and Medicare. I don't know. Look, Elon and Trump said they're not attacking that. Robinhood, by the way, up 5%. But we're going to see. Maybe they do touch Social Security and Medicare. I don't think they will, based on what they've said, but maybe there's no other way to resolve the deficit. Like, we don't know. The point is, I'm at least willing to give them a shot over the next couple of years to see if they can meaningfully reduce the deficit and cut spending. But it's going to take time to see if that actually plays out. Dude, Robinhood's really moving. 41.17. I guess the markets. Okay, so what do you guys think about this whole? I'm seeing some of the comments under my tweet right now, and people are actually upset about the gambling. Why are people upset about sports betting? Why are people so why are people so uptight about this, dude? Like, why? Like, I don't understand why people feel you can't have an investing platform with a sports betting platform. I don't get it. I really don't get it. This is just another avenue for people who want. If you don't like sports betting, then don't sports bet. If you like it, then you like it. Like, people are really upset. Like, what is wrong with people? What? Like, the market's not gambling? You don't think buying Nvidia is a form of a gamble? Yeah, Nvidia has free cash flows that you can look at, but if you're betting on Duke, you can look at the stats on the players. Like, there's different ways to come to a conclusion on making a gamble, but at the end of the day, all this is gambling. So I don't, like, options aren't gambling. Are you kidding me? Like, this is the idea that people are afraid of investing and sports betting being coincided, to me, is stupid. It's absolutely ridiculous. And I think honestly, it's a lot of people that are just bearish Robinhood and they're trying to find a reason to be upset at them. Because let me tell you, if SoFi introduced anything on their app that was akin to what Robinhood's doing, I think a lot of people would be excited about that. But because it's Robinhood and it has the brand that it has, people are upset. Like, no, dude. Like IBKR already has sports betting too. Is IBKR a like horrible gambling platform? Like these takes are just so off, in my opinion. Let people do whatever the hell they want to do, bro. Let people, if people want to buy meme coins, let them buy it. People want to bet on Kentucky versus Duke, let them buy it. People want to buy call options on Nvidia, let them do it. Everyone will learn if shit hits the fan in their own way, just like I did, just like many of you guys did in the past. Like everyone goes through their own lessons. Some people might make them a lot of money going through, but you got to give people the ability to do it versus try to baby them when dealing with the markets. I don't think that's the right way to approach it. Makes sense for a degenerate platform. This is what everyone's saying. Like, yeah, it kind of does actually, because there's a lot of degens on Hood. But I think Hood is growing up a lot as well. And so the funny thing is a lot of rich people, I think, are going to engage in this product as well, because rich people are degenerate too. And they're going to freaking bet $1 million on Kentucky or something. Like the point is, it's a new form of revenue stream for Hood. And I think it's only going to grow and grow and grow. And that's not necessarily a bad thing. Amit, you know why Amazon's down? I have no idea. I would think the Qs might be down. That's why. Are they down? The Qs? Yeah, Qs are about to go red. That's why Amazon's probably going red. Nvidia, Tesla, Apple, all of them are red as well. Big tech just has not been the place to be this year outside of Meta. And even Meta, I mean, Meta, how much is Meta up year to date now? Meta's the only one that's green year to date. Dude, Meta is green by 0.26%. So, yeah, Meta's probably not going to keep it. That means all of Mag 7 the entire year just has not been the right place. European defense contractors have been. Some of these value names like Verizon have been, but not the Mag 7. Rocket Lab right here. Are we about to hit 20 on Rocket Lab? 1979, that's up 5%. That's nice. And then Intel as well, still holding up 7% on the day. Yeah, Walmart's holding up as well. Even though Walmart had a little bit of a pullback after their earnings, but they're up 2.7%. Palantir is flat. Robinhood, look, I don't know if we hold 41. If we can close above 40, that would be very encouraging throughout the end of the day, but we have to see. I think their gold event's gonna have a lot of new features in a couple weeks, and people will be excited about that. But it's gonna be a question of if the market prices that in. Tesla right here at 235, they are down 5.7% currently right now. It's just cool to hate on Elon right now. Most people just parrot whatever social media says. I also agree with that to an extent. Like, I don't know, dude. I think a lot of people get in a narrative and then they get it. Look, I think there's 3 buckets of people that hate Elon. There's the people that are parroting what the media says. There's people that don't like him for whatever reasons they associate with Elon. That can be political. It can be he's a billionaire. You know, we don't like the billionaires, yada, yada. The other reason is that people just think he's a full-on Nazi. And I think those are the 3 buckets. And the one with the Nazi bucket, I think that's growing more and more and more as you get people that are convinced this guy's a Nazi. And I personally don't see it that way. I don't think Elon Musk is a Nazi. I can understand his political views being isolating to a lot of people, but I don't think he's a Nazi. And so I think given you have those 3 different buckets, that's what's happening in the context of what's happening with Elon. Oh, and then you have the 4th bucket, as Martin says right here, the Tesla shareholders that are just annoyed he's not showing up to work. That's the other, that's the other part of people that are annoyed about Elon. But those are, I think, the kind of core populations in the United States that are globally that are thinking about Elon. Let's get an update on Nvidia. We have GTC coming up today, and then Jensen speaking tomorrow, and then we'll keep going from there.
Bullish ahead of the event. This as the semis come off their first positive week in 4. Christina Partsinevelos is here with more on what investors should be watching. Hi, Christina.
Hi, Mike. Well, you may have already missed the boat. GTC, the GPU tech conference for NVIDIA's seasonality, suggests that NVIDIA shares typically rise in the weeks leading into the event, while the relative performance post-GTC consistently lags. And this year is a little different. Much of the products like Blackwell Ultra, new racks, co-packaged optics, next-gen Rubin are largely already expected. And with tech stocks, notably semiconductors, not trading on fundamentals today, Cantor Fitzgerald says, quote, they are not sure Jensen can really say anything that would completely shift the market course. and overcome investor fears about macro geopolitical uncertainty. Mizuho bets the stock actually stays range-bound until May earnings. Historical data, though, from Wells Fargo reveals a striking pattern for Nvidia. So Nvidia has pretty much outperformed the SOX index by 6.5% percentage points on average during GTC week over the past 5 years. So things have been going pretty well, this week. However, these gains have proven fleeting. Look 1 month out, the average return post-GTC for Nvidia sits at negative 1.6%. The stock, though, enters this GTC week with one notable advantage. Shares currently trade at a valuation discount of around 35% relative to its median foreign price to earnings multiple over 3 years. So everybody's talking about how cheap this is, but the valuation drop is rare, very rare at the start of a product cycle. Bernstein notes, quote, investors have historically done well to buy the stock at 25 times or lower with an average 150% next year return with relative limited downside. So a bullish call from them. But the bottom line is you may have already missed the boat if you're looking at, daily trades and pre-event gains, but the current valuation suggests any post-announcement dip could be your chance to buy before the next rally, should there be a big one. Mike?
All right, Christina, thank you. Stock's really been range-bound since last May's earnings, as it happens in retrospect. We'll get more from you as it develops. Speaking of NVIDIA, Kramer, out west, all
right, that conference is going to be important. That conference is going to be very, very important for NVIDIA. Tomorrow's when Jensen talks. So not today. I don't know how much they're going to announce today, but there's going to be someone speaking on the stage. It's not Jensen, but it's some of these companies. Tomorrow's when Jensen talks. I think the quantum stuff happens also tomorrow, not today. So we're going to see some different key themes be presented, but tomorrow's when Jensen officially goes live. Okay, cool. I think we are done for today. Let's pull up the word of the day, and then I'll be back for the market close. Happy to be back in the studio, be back on a regular schedule. And yeah, keep everything going the way we should every day. Oh, quantum is today? Okay, cool. So we'll probably get some update. Maybe that's why D-Wave was moving today as well. All right. So if quantum is presenting today, we'll probably get some updates on that as well. Word of the day is in theme with St. Patrick's Day. Shamrock.
Shamrock.
A type of clover used as a symbol of Ireland. She found a tiny shamrock growing between the two cobblestones. The bakery's signature St. Patrick's Day cake featured shamrocks made of frosting. To everyone who's out there, who's Irish or in general, if you celebrate St. Patrick's Day, happy St. Patrick's Day. I know a lot of people celebrated over the weekend by getting drunk and like going to bars and stuff. But yeah, today is St. Patrick's Day. All right, cool. That is it for today. I'll be back on the market close like normal. We'll have Jason on tomorrow. And yeah, that is pretty much it for today. I don't think there's anything too crazy this week outside of FOMC. That'll be important from a macro perspective. Do we have any earnings this week? Last week we had Oracle, which was the big one. This week we have Accenture, Nike, FedEx, Lennar, Neo, Carnival Cruise. And then, of course, we got Williams-Sonoma on Wednesday. So that'll be a great one to cover as well. There you go. Last look at the markets before we head out for the day. S&P is still green. Palantir's red. Robinhood up 4%. Baba's up 4%. Rivian's up 1%. Nvidia, Amazon, Microsoft, Meta, all of those are green. Walmart all those are red. Walmart, Intel, Rocket Lab are green. Celsius green 7%. The Qs just went red, and the S&P basically flat, up 0.09%. Tesla as well down 6%. S&P 0.1%. So we'll see by the end of the day if the S&P can get us 2 days in a row of green following Friday. All right, cool. That's it. I will see everybody on the market close. Thank you all for being here. Back in the studio. Happy to be back with the bricks. And we'll be back later on the market close. Bye, everybody. Have a good one.